I'm your host, Chris Vecchio in New York, Ilya Spivak in non-riding San Francisco, Dylan Radigan in Milan, getting ready for a Sasnoff and Batista trip over there, coming right up around the corner. But we're here to take you through the rest of this hour. Join us until 5 p.m. Eastern when the futures market closes. If you're on the platform on tastylive.com, thank you for joining us. Come over to YouTube. Tell us what you're trading, what you think of this meandering kind of day. The S&P 500 up by a whole 0.05%.
Hey!
825,000 contracts traded, which me thinking, are we rolling today? That doesn't make any sense, Chris. But sure enough, that's just the trading volume. It's pretty light. Nothing's doing there. S&P up only 0.05 to the Nasdaq's gain of about 0.1. The Russell's the leader up by 0.71. We have yields down a little bit across the curve. Silver continues to charge higher. Your dollar's mostly softer following those yields, which I guess that's good news. The backdrop of all of which, of course, is that there are Sino-American talks going on in London to iron out a potential handshake agreement at the minimum, according to Press Secretary Karen Levitt. But it's a day where the markets basically do nothing. Dylan, I haven't had the pleasure of seeing you, though, since last Wednesday. Has anything interesting gone on in the market since, say, the last time that we met?
Not that I can recall.
Me neither. It's a quiet Monday on the other side of riots in LA, and of course the Trump-Musk fallout here. I know that you got wound up last week. Ilya was very proud of the fact that he's like, oh, we had the best content ever. I just got Dylan going on about Tesla.
Smart, great. John Tesla.
And I listened to it.
But we were right. Look at that. Tesla was a buying opportunity. I mean, it was.
Yeah.
If you didn't buy Tesla on the idiocy, when do you buy it? My question for you people is, did Scott Bessent give Elon Musk a black eye as they assert he did? Was there a physical altercation between the first buddy and the Treasury Secretary where they came to blows and the first buddy took a black eye?
I mean, if Scott Bessent gave Elon Musk a black eye, that might have been the least exciting fight in the history of fighting.
Scott Bessent's not a lefty. So
okay,
I mean,
no way.
Have I looked into would this go into the pantheon of stories about the Trump White House, like Peter Navarro being hogtied so that Lutnick and Bessent can get Trump to tweet out the April 9th? Like, yeah, I would love for this to be the story. It's great for my own personal headcanon. I don't know if Scott Bessent punched Elon Musk in the face. Something that's true. As funny as it would be like for like how decisions are being made there. But yeah, actually Tesla has a really good day, 4.55% higher. The entreaties between Musk, or at least from Musk towards Trump, are pretty apparent. He's been tweeting some more or kinder things, calming down after last week's nonsense. But Tesla being back up takes a little bit of drag off the index, which quite frankly was down on Thursday simply because of Tesla. It's a quiet start to the week, though, here, Dylan. I mean, are we just waiting for some sort of shoe to drop here? I know, Ilya, we'll talk about inflation in a bit, but
sure.
Surely there's a part of every one of us, maybe people in the chat feel otherwise, that maybe this market's a little bit of a surprise move given some of the headlines in recent days, Dylan.
I mean, it's one of those things where I think we've talked about this a few times where there's been so much excitement, especially obviously, whatever. There's been a lot of excitement going back to the election, really, right? Like, so figure from last September through the end of April, how many months is that? That's many months of extreme stimulation and wild speculation and all the things. And I do kind of wonder, also summer is coming and, all the things. And I don't think it's unreasonable to speculate that that the market could kind of churn sideways for a while, that the volumes could come down and that price action could diminish until basically up to the point where there's a reason not to, meaning some extraordinary piece of economic data or some meaningful sort of change in the expected trajectory of so the sort of core policy decisions. So I don't know that this is just a one-day wonder. This might, for me, there's a reasonable chance that this is an indication of what could be certainly many days and potentially weeks or even months of a slightly less stimulating type of price action.
I mean, to give Chris where credit is due, let's take the nonsense of the headlines off the menu. Last week was kind of a growthy week. Stocks up, yields up, crude oil up by a good margin. In the FX market, euro is up against the dollar and the yen is down, fractionally, but nevertheless. Euro is up because the ECB sounds reluctant to cut rates next year because of the defense spending boost. That's growthy. The yen weakens as yields go up. That's growthy. Bitcoin, that doesn't really do anything, but it's a weird one. So let's write that one. Yeah, so it's basically in a range. It's near the top of its range. It hasn't gone anywhere in a few weeks, basically. So when you look at kind of the upshot last week, it all kind of looks like maybe the markets have arrived at the conclusion that as long as the foolishness continues in Washington without any real consequence, in the sense that as long as everybody keeps yelling back and forth, but there's constantly an 11th hour reversal on any one thing. Trump and Musk are fighting. Okay, now they're not fighting. Trump and Xi are fighting. Okay, now they're not fighting. This is happening. Okay, now it's not happening. Okay, now it's happening again. Okay, now it's not happening again. Every 48 hours, the story flips, but ultimately there's not really anything that happens. And so maybe this is like a really loud version of paralysis, and the markets like paralysis.
Interesting. It's kind of like gridlock. Markets do like gridlock.
But loud gridlock.
Yes. Not
headline heavy gridlock.
Yeah, not like I'm resigned to the fact that traffic's moving and this is just traffic. Like I'm angry that I'm sitting in this traffic kind of gridlock. Like everybody's spinning around in circles and they're going fast, but they're not going anywhere. Okay, I can buy into that a little bit here, Dylan. If that's the kind of market that we're in right now, is today is a really quiet day. I mean, all things considered, headlines, flow all session long, and no one really does anything. Are we just waiting for the shoe to drop? That is the U.S.-China trade talks. No one wants to make a move until we get some hard data.
I'm not even sure that we are waiting for that, because I think people expect those trade talks to end up with something relatively benign. I think all fear of sort of extreme tariffs has been wiped completely off the table. I just don't. I just think it's, even if, let me put it this way: if those trade talks break down and there's a big headline that's all of a sudden the trade war is back on and the market sells off, everyone will buy that dip.
I would point out 6 sectors are down today among the 25 that we cover here. SMH is your top performer, up by 1.67%. Elliot, I know that you don't like your diagonal trend lines here, but that's a pretty clean one off the highs that we have last July, this past January, and we trade up in there today to sell off. What matters more this week? Inflation data that will do absolutely nothing to convince the Federal Reserve to move on rates in June and perhaps even July? Or this U.S.-China trade talks that Dylan is suggesting may not be even something that we really care about? We're just kind of waiting for it to get out of the way and so we can keep moving.
To me, the most interesting story for a few weeks now, and it becomes a matter of, do you get a lull in the loud stupid to actually have it break through, is the story about growth and the story about the U.S. consumer. And the U.S. consumer isn't happy. And we're not going to get that answer. But in the CPI data, we might be, interestingly, more interested in sort of the extent to which core services continues to cool, because that's where consumption lives, and that would be a growth conversation. And so the extent to which the CPI data is a growth kind of data point rather than a Fed kind of data point, that would be interesting. Because, at this point, the markets don't even expect the Fed to move in July. They're only 50-50 on the Fed moving in September. they're in favor of a move in September, and they do expect it by October. And then there's about a 60% chance that there's a second cut by year end. But in cumulative pricing here, the markets only see 88 basis points all year. They're, again, slightly more hawkish than even the Fed. And we're going to get an update of the SEP next week, which probably isn't going to give us anything controversial because the Fed probably still doesn't know what it wants to do exactly. So with all of that on the table, to the extent that the CPI data tells you something about the consumer, that'll be interesting. And then, of course, on Friday, you have consumer confidence data, which is going to directly speak to this. But the real question is, how much do markets care? And if we are in this kind of melt up amidst loud standstill in policy, well, then they may not care very much. That's really, to me, the big question is, are we heading into a second quarter where consumption is going to weaken again after it was the weakest in almost 2 years in the first quarter? Because that's the real underpinning of the economy. At a time when Europe is weak and China is, we just saw again, imports in China cratered in the data that came out over the weekend, down over 3% year on year. Sharp decline in imports. That tells you that the uptake in China, either for the front running of the tariffs on the other side or from domestic demand, is weak still. And so the growth story is there. The question is, when does somebody start to care about it?
Dylan, one thing that I found interesting about today's action, this little retail ETF, the one that contains all the clothes makers that were hammered during the tariff and growth scare in April, March and April, new high, not just for June, but going all the way back to mid to late February here. XRT breaking out. We know that XLY is in a similar basket, although the Tesla noise is holding this back. Tesla's a healthy chunk of the overall ETF. Maybe it's flagging still. I can look around to XTL, for example. We see here now another index, another ETF that's made its way back through pre-Liberation Day support turn resistance. Even with today's pullbacks in XLF, we're closer to the highs than we are the range lows. I mean, you mentioned that the market doesn't care about this. The price action seems to vindicate that too, not just because the stock market's up 20% from the lows, but the pieces of the puzzle that have been most inflamed, they're not there.
Right.
Okay, no, I mean, that's kind of why I'm like, how can I mean, I just presume that the market is a better discounting mechanism than my opinion. And I don't think the market gives a damn about anything that Trump says about tariffs at this point.
When does the incentive structure change, though? My that I've shared here with you guys, and you guys have both nodded along at times and said, that sounds interesting. But because of the sell-off in early April, you start the second quarter with a lot of people abandoning positions, and then the market rips. So the incentive structure here with the market still net short, as per the most recent CFTC COT report, although the least net short it's been since it turned net short earlier this year. So the short positioning has almost evaporated. Yeah. There would be an incentive for this market to chase higher through the end of the quarter because you got to paint the tape. You got to justify people investing with you. If you can't make more than SPY, then why the heck are you charging 2 and 20, right? You have no business. We get to the end of the quarter. We then have the 90-day tariff extension window coming to an end right around the corner thereafter.
Yeah.
Dylan, when do people start hedging again and buying out of the money protection on puts? When do they start selling their stock in anticipation of the fact that we're now more than 2/3 of the way through? We only have a trade deal with one country. It's not even written down on paper, and it happens to be with a country that we have a surplus with. When do people start to question whether or not we're going to kick the can or ultimately tariffs back on? Is that a concern that we need to have here on June 9th, Mr. Radigan?
I don't think so. I think that if anything, we should be so, from a trading perspective, in my opinion, at this point, we should be so lucky as to have them try to re-implement the tariffs on July 9th or whatever it is, because of the buying opportunity it'll create. Because even if they re-implement the tariffs,
Mhm.
They're not. They'll pause them within a week.
Ilya, I think that speaks to something that Sosmuth was talking about here, like thinking about the calendar and the timing of things. I know last night when he was on first call with us, he wasn't necessarily thinking about the July tariff deadline.
Mm-hmm.
But he did mention that when volatility's low, you start to take your positions off and you start to keep some powder dry, right? And so, tactically speaking, if we're thinking about how the calendar falls the next few weeks, there's really no problem with being bullish here, maybe for the next week or two. But as you make your way into the later part of June and you start thinking about the calendar turning over into July, you have to wonder if maybe you may want to make your way through early July with a lot of chips on the sidelines and see if you get a re-implementation. Because if what Dylan says is true, like Trump's going to come out, he doesn't have his deals in 90 days. He feels really disrespected like Rodney Dangerfield. So he kicks back on the tariffs for a little bit. The market comes back in slightly, right? Countries come forward to accelerate the negotiations. The tariffs get re-extended. The market rips again and we pretend like it didn't happen. But there is going to potentially be a small window there in early July where things go sideways.
With a spike and a little excitement.
So you don't want to be like too vested right now, dare I say. You want to have something in your pocket. So if that does occur, the market at first blush is going to treat this like early April, like not a big deal. We fade the dip. We're going to buy the hell out of this dip until we get punched in the face and the data rolls over. We're now like Pavlov's dog. We're going to buy the dip. But you got to keep powder dry to buy that dip. So there is a window here coming up over the next 2 weeks where I think personally, if you have equity market longs like I do, you have to start thinking, do I take these off a little bit? If I keep them on, do I want to lay into a shorter dated long put to protect me in case Trump wakes up and says tariffs back on, no deals in 90 days, tariffs automatically going back to what I said on April 2nd?
Well, of course. I mean, I think if you look at what's actually occurring here, you have this kind of a parallel development, and the Russell is a little bit of a different animal, but it's not also the largest index in the world. So I'm sort of looking at the S&P 500 as my baseline, and to some extent at the NASDAQ, because it's a sort of dominant animal here with who the top market cap names are. But neither one of these indexes have done much of anything since May the 22nd. And if you look at the highs both of them set on May the 29th, neither one of them has been able to close above those highs. Those are the range highs since both indexes stalled. It's managed to clear the May 22nd close. That's a thing. But the swing highs from last month, they're holding in both indexes now on multiple tests over and over and over again. The market bumps into those levels and is unable to do anything. Today was another day. And when you look at the parallel in bonds, the long end of the bonds bottomed exactly at the same time, May the 22nd. And although it's been a slow grind heading higher, today bonds find support, again at their consolidation range. But they've been quietly drifting higher at the long end. All of this together is painting you a story not of exuberant optimism, but of a kind of begrudging wait and see, not prepared to throw in the towel, but getting worried because rate cuts are getting pushed out into the back end of the curve. And the markets go, okay, well, once all of the Michigas filters out of the headlines, if ever, or at least we become so acclimated to it, to Dylan's point, that we just stop paying attention because who cares what they say? It doesn't mean anything anyway. It's going to become a different thing in 48 hours, almost in perfect 180 degrees. And that's going to happen every 2 days or so. If that's what this is, then eventually you do have to look at growth and go, okay, well, we want the Fed to come sooner. They're not coming. Break-evens are falling, suggesting the markets know the Fed needs to start. The president is aggravating the Fed chair again, although interestingly, he doesn't want to call him by name in his tweets. He just calls him, quote, too late. Doesn't want to say his name, which is interesting. So it's almost as if somebody's like, don't say Powell's name out loud. Okay, I'll antagonize him without saying the name. Sorry, Scotty B. I won't say the name. So
didn't realize Trump was a millennial who couldn't say Voldemort. Go on.
See, there you go. So you get at this and you go, okay, so the markets aren't happy, but they're not prepared to get scared. They're just kind of drifting here. But the direction of the drift is very much not what we saw in May. It's very much not what we saw through most of April as all of the chaos unclenched. So I think you have to be prepared for the fact that they're going to be worried about CPI to the extent that it means the Fed's delayed, worried about the Fed to the extent that it means the Fed's delayed next week. And then you get into this weird thing, Chris, to your point, into the end of the quarter where they have to start thinking about, okay, well, so what happens next? What happens with these deadlines in early July? We know markets don't wait for event risk to happen. They front run. So you have to kind of be prepared for the fact that sentiment is going to crack. Now, do we have any evidence that it's cracking actively? Of course not.
No, not yet.
But
not yet.
You do have to be prepared for the fact that this is a soft-footed market that doesn't want to run away with conviction, and that the makings of it make it vulnerable to just exhaustion and a repositioning to rebalance portfolios for something a little scarier, and you never know when that happens. In fact, oftentimes, the most potent versions of this happen for no reason at all. And I'm thinking of mid-July of 2008, where everything just cracked. It just ran out of steam and said, you know what, now is the time. Nothing happened.
The calendar of this all kind of like fits together where, you know, you hear Sosnoff and Tony say, like, oh, as you go into options expiry, you know, this month tends to be pinned. So June 18th is VIX expiration. June 18th is a Fed meeting. Options expire. Looking at the 20th, you know, that's the last day of trading. You have quarterly options expire on June 30th. So there's that week 18, 19, 20 where there's a bit of a potential flush through the system. And then the week of the 23rd through 27th, that's when you get a market that's unpinned post-Fed and really starts to pay attention to and think about that deadline here. Because, I mean, we talk about that tariff deadline being right around the corner. I know it's only the 9th, and you go, you know, it's a month away. That's going to happen real quick. That's going to happen real quick, right? At the end of next week, we're talking about the options expiration for the month of June. So it's right around the corner. We're not that far away right now. So right now we're floating higher. I'm staying long, Dylan. I'm pressing on here. Today's a nothing day. Usually volume-wise, you look for 1 million contracts traded by the time, you know, we're on futures power hour midday, and we were at literally 500,000 on the nose. We do not cross 1 million for today's session, 838,000. Billy, that's kind of the summer trading right now. We may be in for the next week plus as we go into this Fed meeting where it's low volume, low volatility. People just kind of have their heads in the sand, ignoring everything, waiting for some news on the tax bill, waiting for some news on the tariffs. Why be bothered with anything at all? I don't think equities are that, dare I say, that interesting right now. We're at a 13.7 IVR in the S&P 500. It's similar levels for the NASDAQ. Although the Russell does get moving here, and I suppose that is a change in my own personal positioning today in RTYU5. I do take a long out-of-the-money call spread wrapped right around 2,300, in part because as we look to the charts here that have the technical analysis on them, left shoulder, head, right shoulder, or on this hourly time frame, we'll go 4 hour. On this 4 hour time frame, post gap out of the China-U.S. negotiations in Geneva, Switzerland, left shoulder, head, right shoulder, pretty clean neckline near 2135. Either way, it looks like the Russell has been thrust into a potential catch-up area.
Mm-hmm.
And Ilya, as you and I talked on Friday, when you look at the options pricing in the market right now, when you go out to 46 days, looking for a move up to the measured move of 2300 is not out of the question in this 45 in, 21 day out window, given that the one standard deviation move is right between there, about 23.25 right now. I'm comfortable holding on to this position and adding a little bit of upside equity exposure for like the next week and a half. And then at that point in time, I'm going to start trimming down. And instead of rolling, I'm going to maybe take some flyers if vol is still low on some out of the money put stuff to see what happens with the tariff deadline in early July.
Mm-hmm. Yeah, I mean,
tactically makes sense, I think.
Yeah, I'm thinking here about what to do with Russell and maybe putting something on against my other shorts. It's still a little dicey here because if you look at where the underside is of the preceding range, you're kind of not through resistance quite, but vol is really cheap, and so I'm gonna think about maybe putting something on if this sustains and there's not a crazy spill overnight and we're still looking relatively well anchored as we head into the cash open tomorrow. I might put a little something on here that's mildly bullish against my other shorts to kind of reweigh the boat.
Dylan, there was something that I wanted to ask you about here. It's a conversation that really goes back a year now. So for folks that have been following us along with us for at least since last June, we talked about the Apple WWDC 24 basically a year ago. And Dylan, we talked about the potential for an AI upgrade cycle for iPhones, where the release of the iPhone 16 being an iPhone model that would be AI capable would help drive a potential super cycle for hardware upgrades. And while there was some evidence of that coming together over the course of the year, it never really materialized, I think, in the way that Apple, its analysts, or even folks like you and me hope for. Since then, Apple's basically round-tripped. We're sitting where we were effectively at the start of last June. You could see the WWDC last year on June 11th, and that provokes this big skyrocket up. So we're actually trading right around the same levels we were a year ago. Apple's basically done nothing. I say all that because I looked at the WWDC 25 lineup today, and while there's Tahoe OS and a Chat GPT playground, there's an Apple TV karaoke machine. Do you hear that's the third thing I named? An Apple TV karaoke machine? That doesn't sound like an impressive list. Dylan, no. What's the problem with how come we are so much less optimistic on Apple here a year from when we were thinking that an iPhone supercycle could be around the corner?
Yeah, I mean, Apple has not delivered a consequential AI. Full stop. They just haven't done it. And it's one of those things where, certainly from where I'm sitting, I would expect much more from them, although I suppose the more nuanced analysis it would say that the critical characteristic to be a player in AI is a massive, massive, massive pool of trainable data, which is more available to Google, ChatGPT, obviously, and the other relevant players, Grok, et cetera, and that Apple, being a hardware business and being a privacy-driven, a more privacy-driven culture in comparison to the other players, this is conjecture. I don't know why Apple has not delivered a meaningful AI offering, particularly when you consider the loyalty and the sort of embedded nature of their hardware in the hands of particularly Americans. And that the sort of the capture of the audience seems peculiar, that there isn't a more relevant AI that just is resident, that's a native AI on the iPhone. But to answer your question as to why there's less optimism this year than there is last year, is because there's been a year's worth of information, and none of it is terribly inspiring.
It really hasn't been inspiring, Ilya.
Mm-hmm.
Is this just because Apple's missed on the product? I mean, I can't help but feel like the first mover advantage that Apple had with Siri has obviously been missed in a manner like Microsoft shutting down Skype. How did they lose out to Zoom? And yet it happened.
Mm-hmm.
So Apple here, they had the voice chat bot that was on every single one of their products, and yet now they're talking about allowing some other company to come on and provide that service.
What's interesting if Microsoft has actually lost out to Zoom, because of course they have Teams, and Teams is a very big product, and Skype and Teams are written on different architecture, and they just said, you know what, we've picked one. Everybody's got to go to Teams now. And Teams is something that, I mean, obviously we use it here internally, but it's shown up a lot in sort of my comings and goings with people outside of work that are like, oh, I'll schedule a call. I'll do it in Teams. So I'm not sure if there's a parallel here, but for Apple, you do kind of get a Microsofty vibe in the sense that Microsoft was quiet for a long time after being sort of the dominant software provider, the dominant OS provider, until they kind of figured out what to do with hardware and with Xbox and sort of things like this. So there is a level of cyclicality to this. A company can only figure out things for so long, but that doesn't tell me to be worried about Apple's long-term prospects. From a trading perspective, you look at this and you go, well, there's just nothing to do here. You're in the middle of a range that you've been holding basically since early April. Vol is really low, so there's really not anything to do as a sideways bet just to be selling volatility. So there's just not anything interesting here.
It's not interesting. It's a 24.3 IVR. I know that's a little bit more than the indexes, but that's just so low. Yeah, I walk away from WCDC looking like this feels like Apple kind of feels like it's listless here. Is it too soon to say replace Tim Cook? If the Knicks can fire Tom Thibodeau, can Apple get rid of Tim Cook? I don't know. This market's been doing nothing. It's been range bound, so I suppose if you've been trading it directionally neutral the last few weeks, it's been nice to work with. But quite frankly, what technical impulse do the bulls have to hang on here? Like, that's broken. This is broken. This is breaking. I'd like to see something more from it. It's obviously a huge part of the NASDAQ, but it's not really doing much of anything here. I mean, the announcement, just for the sake of, I wanted to pull this up for the sake of me not exaggerating. This is CNBC here. We'll just extend this. We're not going to support. Here's the rundown of the big announcements according to CNBC. Liquid glass renumbering of the OS systems to 26. That's the number 2 most important thing. That makes the list at number 2. Vision Pro Gaming, Kiwi Karaoke, Apple Music, ChatGPT for Image Playground, and live translation. That actually looks kind of cool. Where if you're FaceTime,
live translation is pretty cool.
Yeah, that's where we're getting to like the Star Trek. everyone just talks their language and you just hear it in your own. That's the future utopia world that I'm hoping. That's the the sci-fi world. But everything else is kind of garbage, not really meaningful or impressive. So Dylan, where to next, right? Like, what's the next great American tech hardware company? Is it a Palantir Software? Is it going to be a company like Anduril? Is it a company that's not listed here? Or is it still NVIDIA?
I think it's too soon. I mean, I think you got to be careful about writing off Apple just because it's, hasn't performed.
Right.
I wouldn't be, and to answer your question, I think the greatest American hardware company is Tesla. I believe Tesla is the most important hardware company in America, regardless of the management. I believe that their vision of integration of transport and software is the most consequential thing that's happening in hardware on Earth, or certainly in America. I mean, the Chinese are got a whole other racket going, but I just think that the integration of tech and transport and logistics, that there's two major tech stories that exist right now. The one, the obvious, which is AI, and then AI Gen 2, applied AI, data training and all that, and then transport software and logistics as an integrated field of action, with the sort of self-driving car being the sort of icon of what that represents. But I think there's more there. I'm much happier owning Tesla than I am owning Apple. Let me put it that way.
That's a really good question. Which one would you rather own?
Tesla. Tesla has so much more kinetic energy as a company and as a stock.
Ilya, I'm putting you on, which one? I think this is actually an important exercise. In college, me and my friends used to set an exchange rate for stuff. Granted, these are my fraternity brothers, and the things that we were trying to set exchange rates for probably not, good to talk about on air. But creative situations like, wow, you would do X for Y, but not Z? Interesting. So, what's the exchange rate here? Would you rather own Tesla with all of the noise? And it's not exactly volatile. It's a 27.6 IVR. But would you rather own Tesla with all of the narrative noise around it? Or would you rather own Apple for, say, the next 45 and 21-day out cycle if you had to be bullish on it?
If I had to be bullish on it, you'd have to say Tesla, because at the very least, you can go up to the top of the range here, north of 360. You have that space. So if you ignore completely everything and just look at the price action, you would say, okay, if you go long Tesla here, you're wrong quickly and you have more upside. If you look at Apple, you don't have that. It's a narrower range that you're in the middle of, and you don't have great risk reward either way. So on pure trading grounds, and I don't intend to be long either, but on pure trading grounds, you'd have to say Tesla.
I agree completely. I don't know if that says a lot about how we feel with Tesla being dislodged on Thursday, Friday, where it's dislodged for ridiculous reasons, or if this is a greater indictment of Apple. I think this is a greater indictment of Apple.
I agree. I was just thinking the same thing. I'm like, what does the world come to that Apple feels like Ford Motor Company? I mean, it feels deeply boring in a world of incredible dynamic activity, which Apple is arguably has been the most dynamic of all of them, over the last couple of decades. I know that that's a story that's been told 1,000 times. Everybody has their day where they get long in the tooth, and maybe that's where we are with Apple.
Yeah, maybe on the other side of WWDC, you see that there's a reinterpretation. Tahoe OS is the great, Apple karaoke. It solved world peace. Look at all the people it brought together.
But also, what was the headset? They've had two big busts as far as I'm concerned right now, because they did that big play, whatever that virtual thing that no one even remembers is, including me. But I know they did a headset. It was a total bust.
The Vision Pro.
And their AI is a bust. What is it?
The Apple Vision Pro.
Yeah, Apple Vision Pro, whatever. Ridiculous.
The Meta Ray-Bans are cool.
I agree. I saw those.
I mean, I have Ray-Bans anyway. But I would get a pair of those. Those would be fun to do things with. Mm-hmm. I've seen some cool videos. There's actually a Las Vegas wine guy I follow on YouTube. It's just he works in some high-end restaurant where he uncorks wine. It's oddly cathartic, right? him explaining the wine. I don't know. That seems like an Ilya thing, though. Ilya, I'll send you the link for this. You'll like it. We get off of Apple. We get off of.
I can get down with uncorking some wine.
Yeah, like ASMR of wines being uncorked. It's a weird thing. Okay, so we've talked a little bit of Tesla, Apple here. I've seen a few people. They've messaged me, Chris, what do you think of what's happening in Los Angeles?
Yes.
Waymo's cars are being set on fire. Does it matter to Google? No. They're up 1.51% today, closing at the highest level that we've seen going back to the middle of February. Dylan, there are so many different ways that we could take this conversation. I think I'd like to provide a little bit of background here because I just finished watching American Manhunt, Osama bin Laden, the new Netflix documentary that's out over the weekend. Did you know that when we had the Al-Qaeda stronghold of Tora Bora surrounded and Osama bin Laden surrounded, there were about 300 U.S. troops on the ground, 100 CIA officers or so and related entities and 200 Rangers. And the U.S. military refused to send in any more troops because, according to Rumsfeld, it was a CIA operation. I really think that's important to know here. The U.S. troop totals, 100 to 300 on the estimates. 700 U.S. Marines are being deployed into Los Angeles, Mr. Radigan, to quell the rioting. The rioting, I think, is absolutely
U.S.
ridiculous.
Marines or National Guard?
No, U.S. Marines. That came out about 15 minutes ago, officially. Pentagon made the announcement.
Pentagon announced they're doing 700 active duty U.S. Marines.
Correct. We are sending more active duty U.S. Marines by a factor of 7 into Los Angeles than we did to kill Osama bin Laden in 2001.
I'm not surprised.
So I bring that up because this is obviously something on a lot of people's mind. I, for one, find protests like this exceptionally counterproductive and alarming. I don't know who the hell is being convinced by seeing Waymos on fire that you're the good guys. I don't get it. I think it's abhorrent behavior. I think you're radicalizing and negatively polarizing people against you for this very issue. There's a lot of data out there to suggest that's exactly what happens when these kind of things go on TV, because for those that don't really go into the psychology of this stuff, the protests are not about pushing back the police. If you're actually doing a protest, the protest is for the people who are seeing the images of the protest. Because after all, a protest is propaganda. And you want to generate a sympathetic view. That's why when you see the images of Martin Luther King walking across the bridge, it's arms locked with American flags waving behind them, not Waymos on fire with Mexican flags waving behind them. So the aesthetics of this are terrible. The damage to private property is awful. You're not going to win anyone over with this. It's a damn shame that you're doing this, because I recall thinking that January 6th was an issue. So if it's the Capitol or if it's like rioting and burning shit is bad, period. So Dylan, now we have active.
There's a level of gaslighting. There's a level of gaslighting here, and just to add to Chris's element of annoyance, which mirrors mine. Which mirrors mine. I mean, there's graffiti that I've driven by in San Francisco this weekend, calling people like Elias Rodriguez, the killer of the two Israeli staffers in D.C., and Luigi Mangione, of course, who killed the United Healthcare CEO, American heroes.
Absolute cretins.
And that kind of a point of view doesn't represent clearly majority opinion, but representing those kinds of things loudly creates, if anything, the excuse you need for a really sharp, really heavy-handed crackdown from the other side. And you can have those views, Godspeed, as despicable as they are, in my opinion, but the crackdown will be a very real one. And that's not going to help anybody.
Dylan, give us a silver lining to what's happening in the country right now. By the way, I do suppose I owe people an update talking of, geopolitics here. The Ayatollah has not yet responded to my direct message from June 4th. Dylan,
didn't he even bother to block you?
No, he still hasn't blocked me. So it's kind of insulting. It's like leaving me on red.
You're not even relevant enough to block. I think you should double tap that thing, get back in there. Don't be afraid. You triple text if you have to.
What am I going to send? Like a please respond? Oh, I'll send him a GIF of me with the boombox.
Anything. Anything to get a rise out of the Ayatollah. As far as America, as far as the LA thing is concerned, my perception of it is that the entire thing is a deliberate action by the Trump administration to create the optics of law and order.
Okay. Boombox.
And so, what's that?
John Cusack holding a boombox sent to the Ayatollah. Yeah. Go on.
Thank you. Good job. Mm-hmm. And so I just think the whole thing feels like theater to me. Not that the deportations are not real or that the protests are not driven by sort of genuine emotion, or that the desire to stop the protests is not driven by genuine emotion, but strategically the decision to do the National Guard override at a federal level and then to send U.S. military personnel into a U.S. city all strikes me as profoundly theatrical, and ultimately does, I don't think, much of anything to reconcile the reality between any side. I mean, in other words, no one who doesn't like Trump is going to be persuaded to like Trump because he's sending in the Marines. And anyway, no minds will get changed, but it is, I think sadness is kind of the primary emotion that comes up because you're just looking at a deliberate escalation, a deliberate, hyperbole of an already sad situation, and shame on everybody involved.
Obviously, I mean, Waymos just don't drive around, Dylan. So people are calling the Waymos into the area to light them on fire. Who are you winning over?
Shame.
Who? But just from an organizing tactic, who is that winning over? Who are you convincing? This is
no. But then you just get all the false flag stuff, and it's like there's sort of all these sort of layers upon layers of measures and countermeasures and internal agitation and counter agitation, and so when you have a group of angry people together and you give them the opportunity to destroy something as a mechanism to vent frustration, they will destroy it. It doesn't help it's not good for anyone or anything, but it is the most basic sort of impulsive behavior of the marginally different primate that is a human being in comparison to your standard wilderness chimpanzee.
Chimpanzees are really stupid. That was something I learned this weekend. If you gave a chimpanzee a jar to open, it would smash the jar. If you gave an ape a jar to open, it would open up the jar and pour everything out. And if you gave an orangutan a jar, it would gently open it, pour everything out, close it back up, place it down without breaking it. So
really?
Chimpanzee, yeah. So that was a pretty derogatory low blow to say that it's chimpanzees.
I feel like
that's
humans
really
are more the
stupid.
chimpanzee than the orangutan. If you comes down, I believe the orangutan may be a couple notches above the human, especially when it comes to a large group in a state of heightened frustration and emotion.
I can't help but wonder if we're going to see some of these headlines about mass property destruction. What should we be doing in the insurance space, right? We saw the wildfires at the start of the year, right? What did that do? Wildfires couldn't take down the KIE ETF and the corresponding companies within it. I'm looking at That, and I'm looking at industrials in aerospace and defense right now. Ilya, this has been the most interesting chart that's crossed my screen in recent over the past 2 days since I started looking at things over the weekend. This is a relentless march higher.
Yeah.
Are we going to war sometime soon? Like, why is defense reeling higher faster than almost anything else since the April low?
Well, I think one of the things that you learn from all of this volatility that we've seen, and you certainly heard it from the ECB last week, there is a lot more defense buying of kit that is going to get done, because if you are losing confidence in the U.S. security blanket, then you need your own guns. And we know Europe has very much gone that way already. That probably speaks to all kinds of other places, because in a world where the U.S. is not the big scary policeman keeping everybody in check, it's more a free-for-all, and everybody needs the guns to survive. And beyond sort of where the U.S. is going,
it's dark,
which is probably not anywhere. I mean, it's also the reality. Just look at the incidents of war around the world right now. Look at what's going on in Rwanda, looking also to the Middle East, of course, looking to the Russia-Ukraine theater, of course, but also in a lot of other places. There is a lot more war and a lot more conflict around the world right now because the scary policeman has gone to sleep and is not interested in anybody else's business. And that means more guns are going to get sold. And U.S. defense manufacturers aren't just building these things for the Pentagon. We're one of the biggest exporters of arms, if not the biggest, around the world. So this is cross-border sales, perhaps, or expectations thereof.
It was an interesting week of headlines, of course. I think the big picture for us as traders is that you can't overreact to some things that you see on TV, because anyone with any basic media literacy can look at a map of where these LA riots are going on and see that this is something that probably didn't touch 99% of LA's population.
Yeah.
Right? You know, Dylan, one of the things that constantly impresses me when I travel out west is the sense of sprawl once you get away from the Northeast. Because New York, Manhattan is 23 square miles. Los Angeles itself is 520 square miles. So if something happens in Manhattan, everyone in Manhattan knows about it. It's inevitable. Something happens in LA, it could be a world away. I have my own political thoughts on what occurred there, but in terms of what does this mean for markets and rule of law and stability here, if this was a big deal on the first day after this is occurring, even here after hours with these headlines are coming out, we're 2 minutes from the futures day closing, stocks are not red. You're not seeing anything freak out in gold or silver or this. It's important that we have a job here, guys, right? As much it is to provide our opinions to folks, it's also important to help folks contextualize what all this means.
Yeah.
And right now, it's a really intriguing news story. And that's about it when it comes to the market. Nothing more. Maybe it becomes something else, but nothing more. There's no trade here.
Yeah, I think it is. I think it is as irrelevant as the tariffs.
I think we all are. You know, I don't want to see any of this stuff on our streets, right? People, I feel.
But also to your point, I mean, the thing is, because of the way the news works and because of the way, especially social media and the TikTok videos and all this works, you know, it creates the perception of that the whole city is in chaos when 99% of the city is unaware of what's even happening beyond what they're reading on TikTok themselves.
And I'm not doing
whereas
this.
San Francisco is a much denser city. It's not.
Yeah, San Francisco is like New York.
Yeah, it doesn't have the sprawl of LA. You'd know, and even here, all of the kind of San Francisco is chaotic, blah 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 blah. It's maybe 5% of the city that was being talked about back when that was still something that was a festering wound, and it isn't even that anymore. So, how much does it matter for markets? Probably not very much until there's real conflict between Newsom and Trump and state and federal law enforcement come to blows or some such thing. Absent that, markets aren't going to care.
No, and I bring all this up because I'm not saying these are mostly peaceful protests. I think you want to protest, fine. There is a right way to protest. I know that because I protest. I'm not letting stuff on fire. So it's kind of a lead by example. All right. There is a right way to protest. But if you're looking at social media and you're watching the news right now, you're getting fed a fire hose of misinformation, which is to say that you're being led to think that this is a wider scale issue than it really actually is. What, 500, 800,000 contracts traded in ES? That's nothing. That's absolutely nothing here. Focus on what really matters in the market this week. We have CPI coming up Wednesday. There were a few interesting earnings reports the next few days. The Fed's meeting next week. We're going to cover it all here. Unfortunately, overtime is out of time for this Monday, June 9th. We'll see everyone tomorrow, same time, same place, as we do every Monday through Thursday here, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan and Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. We'll see everyone again soon. Up next, after the break, Ilya Spivak with Macro Money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
It's a quiet day for markets as they figure out what to do next after last week's fireworks. But as we'll take a look here in just a second, the breakdown from last week's performance, headlines notwithstanding, was decidedly optimistic. That sort of clashes with what emerged out of economic data and out of the policy circles. So we'll try to figure out what it is that the markets are so sanguine about here as we get ready for another week of macro risk, and consider whether finally there is something actionable on the table to be worried about, or if the markets just plainly do not care. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we'll start the conversation here as we try to figure out what in the world is occurring here with a look at last week's performance and consider sort of what that means in context and how that sets us up for this week, where we do actually have a good bit of notable event risk to contend with. So here's the breakdown. And if you knew nothing about Donald Trump fighting with his, until recently, first buddy Elon Musk, if you knew nothing about the on-again, off-again tiff with China, where, again, the president seemed to say that China is not holding up their end of their total reset in Geneva, but then there was a helpful conversation, one supposes, if one just reads the headlines, between President Xi and President Trump over the phone that now sets up a negotiation in London, and we've reset again, and back and forth we go. If you ignore all of these things and just look at the price action, we have a second week of gains, albeit at a slower clip, from the S&P 500, up 1.5%. We have another 1.9% rise in the NASDAQ. So back-to-back gains here for the stock indexes. Yields up both at the long and the front end of the curve, 2.5% for the 10-year and 3.5% for the 2-year. Crude oil surging higher, 6.2%. All of these things have a distinctly pro-growth mix, which is a very interesting sort of thing when you consider that probably the biggest bit of economic data last week on the growth side of things, the ISM surveys of economic performance across manufacturing and services from the Institute of Supply Management showed that economic activity in the U.S. economy actually contracted narrowly for the first time since April of 2024 in May of this year. And that's as new orders fell, prices surged, employment basically went nowhere. And this is 80% or so of the economy. So this is not happy news on the growth side of things. The jobs report ended up looking okay at the headline, somewhat. 130K expected, but 139 returned. So I suppose that was a slightly better than expected reading on headline payrolls. But of course, the previous month was revised down by 30K. And the previous month was revised down too. So on net, did we end up with more jobs than we thought we'd get before the data came out? No, we came out with meaningfully fewer on net. And yet the markets are clearly tuned to this sort of growthy mix when we look across the major assets. Stocks up, yields up, suggests a positive view of economic growth. Business activity boosting both the outlook for returns and the outlook for borrowing costs. Crude oil up meaningfully, ostensibly around the same theme. Looking at the FX markets, you see the euro up 0.3%, but the yen down 0.8%. That also seems relatively in line with a more growth supportive view. The euro up after the ECB cuts rates, but then signals rate cuts are almost near the end, because next year, as we suspected incidentally here on Macro Money last week, the build out in defense spending next year promises a boost in both growth and in inflation in the Eurozone. And so the ECB name checks this, not surprisingly, and suggests that there is perhaps less to be done. So the euro goes up, as we anticipated that it might. Meanwhile, the yen is down, as you might expect, in the situation where yields are up. The world's least positive carry currency and the one that's overwhelmingly the funding of choice for carries strategies, that's not surprisingly here lower as yields are up, as bonds are down, and again suggesting a kind of risk-on vibe, a kind of pro-growth vibe. Bitcoin and gold don't really comply with the narrative, but neither do they go very far. Bitcoin is basically flat inside its range, and gold sneaks up 0.9%, but again is kind of locked in a consolidation. So, headlines aside, all of this looks almost optimistic. Now, this is where we start to have a conversation about what all of this means as we enter the coming week. First up on the data front is the U.S. CPI report. Expectations here that we're going to get a notch up on inflation, 2.9% expected for the core rate that excludes food and energy, which is the Fed's preferred gauge because, of course, it has no agency over either global food or inflation prices. And in any case, as we can see from the chart here, almost all inflation at this point in the U.S. is buried inside core services. So the headline is an interesting thing here. Uptick expected to 2.5% from 2.3 in the prior month. That, of course, would be a meaningful departure. That would be the highest inflation that we'd seen in 3 months at the headline. But the uptick to 2.9% for the core, that's really where the interest is. That would be the highest since February as well. 3.1% was the level then. But it would also be the first uptick since January, when inflation went up from 3.2 to 3.3% on core. So This is yet another data point here, it looks like, that will reinforce the idea that the Fed is not going anywhere fast. You have here the current breakdown in policy expectations, and you're looking at 88 basis points in rate cuts being priced in this year and next, 39 basis points for this year, 48 for next. It's very interestingly light compared with what the Fed itself has been saying since December and then reiterated in March. They're looking for 50 basis points this year and then 50 basis points again next year. So the markets are, against all odds, a little bit on the hawkish side of Fed policy expectations, which is interesting because, of course, it suggests that the markets don't expect the Fed to have much of an impetus to move quickly. And we can see that in the curve here. No rate cut on the menu when the Fed meets next week here, clearly. Continued standstill in July. You start to get a little bit more of a probability of a cut by September, and then by October, that cut is there. So thing to keep in mind here, of course, is that these are midpoint rates because the Fed sets its policy in a range between 2.5 and 4.5 and 4.25, currently, and that's 4.4%. 4.4 is the kind of midpoint here, and you can see that holding through here until July to really then see the rate cut fully discounted. You'd have to look at the kind of midpoint rate to come down to 4.13 or so. And you see that essentially by October. There's a bit of rounding here, but by October, by late October, which is when this policy meeting is coming, you do have one cut essentially on the board. You then have a little bit of an expectation that you're going to get a further cut by the end of the year, that would need to be at 3.88. It's at 3.94. On the whole, you're looking at just under a 60% chance that you get that second cut. And that's for this year. You can see that the curve has meaningfully shifted to a less dovish setting as relative to when the Fed met in May, and certainly as relative to when it met in March. So this Fed meeting coming up, almost certainly, as far as the markets are concerned, bringing nothing of substance as far as action. We'll see if there's any change that occurs in the makeup of the summary of economic projections. The Fed kind of pointedly marked down its growth expectations and marked up its inflation expectations in March, but left the rates path exactly as it was in December, basically saying, look, we don't know, and we're just going to have to wait and see what all these tariffs mean. We're concerned they might be inflationary and negative for employment at the same time, but we don't know how they're going to work out in practice. We worry that there's going to be a sense that these policies are pushing our objectives in opposing directions, and so we don't really know which one we should prioritize, clearly. So we're just going to wait and see. And the markets seemingly are endorsing the idea here that the Fed has more room to continue in that direction. It certainly doesn't help that there's been increasing concern about the veracity of CPI data. Wall Street Journal reporting last week that the percentage of implied outcomes versus actual survey-based data collection in CPI is at this point greater than it was during the full-on lockdowns amid COVID. So right here we can see that whereas before COVID it was normal to imply about 10% of the data where you couldn't readily collect, let's say, the price of chinos in a particular jurisdiction, and instead you were able to substitute the price of cargo pants or some such thing. Things like that accounted for about 10% of the data set. We can see during COVID amid the lockdowns, it understandably poked up about above 50% here very briefly until it sort of normalized to this 10% cap. Over the past 2 months here, especially in April, this has been a runaway skew toward implied data, almost 30% of the total in Wall Street Journal reporting in April, and that's largely as the Trump administration's efforts to reduce expenditures on employment, or hiring freezes and firings, that has meant that there's just not the people to do this data collection. And so the data itself will become somewhat fuzzier than they have before. So if ever there was a reason for the Fed to sit back and wait for the data to really give them a clear story over multiple releases where this kind of a thing becomes less important, because it's just evened out by having enough data outcomes to see the trend, this just further cements that the Fed is sitting on its hands for the foreseeable future here, at least going through the rest of the second quarter here into the third. And then what happens in the fourth, we'll have to wait and see. The next big data point to consider here comes at the end of the week, and that's, of course, the flip side of the Fed's standstill. This is consumer confidence data, and it looks like we're looking for a little bit of an uptick on the headline measure. We can see that there was a sort of stalling at 3-year lows in the May report, and that's as estimations of current conditions continued to deteriorate, but expectations started to somewhat base a little. Of course, this is 1 month's data, so don't write home about it yet. But it does look like maybe we've sort of found an extreme in sentiment. We'll see if that carries off into this month. But this, of course, becomes the most significant counter to Fed inaction, because the majority of economic growth, as we've discussed at length here on Macro Money, is consumption. In the latest GDP numbers, it accounted for 68.5% of the overall total. And that's where things get interesting, because when you look at the breakdown in growth dynamics from the first quarter GDP numbers, aged though they look at this point, you have, of course, this tremendous burst in imports around front running of whatever the tariff regime might be. It's unclear still, because of course you don't have April in these numbers, but you do have the expectation that a bunch of tariffs are coming, and because of course the Trump administration ran on there being tariffs, and of course by November at the latest you'd have to know that some amount of tariff hikes were coming. So here goes the front running of those tariffs. You see that show up likewise in the dramatic build out of inventories. That's this investment component here, and inventories count towards it. So there it is right there. But when you look at how much all of this contributes to actual GDP, it's really not that much. It's the giant swings in these categories that really made them so important in the first quarter. I mean, this was close to a 40% swing annualized in imports, which is absolutely off the charts. But as contributions to GDP overall, these categories are minute. The big one is consumption. And what you find in the first quarter is that, yeah, businesses are front running all of these things, but consumers aren't exactly going out and buying them. And you saw this in spades in April's retail sales report. Whereas you could make the argument that in March there was a surge in retail sales because of similar front running by consumers. In April, it didn't hold up. And in the first quarter, it clearly didn't match the vigor of the front running because we can see here the weakest consumption since back here, the second quarter of 2023, which gives us the weakest setting on the most important part of the growth puzzle in almost 2 years. So really the question here is, can consumers hold up? Despite this loud pessimism, this surge in inflation expectations that we've seen up to levels that are by a full percentage point and then some, topping the peak in 1 year consumer inflation expectations amid COVID. Are we going to see consumers come through ultimately? And at least if the first quarter was any indication, the answer is probably no. But the markets is not particularly concerned about it seemingly just yet. And so this is the dichotomy that we must grapple with this week. We just had an updated set of global PMIs from S&P Global and JP Morgan. This takes in all of the various PMI readings, and we can see that the manufacturing output index has cratered back down deeply into contraction territory. As ever, PMIs are around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The faster the contraction, the further below 50 you go. The faster the growth, the further above 50 you go. And you can see here, really, since the middle of last year, global growth has been slowing and has increasingly slowed at the start of this year, largely as the U.S. has started to converge downward on the ongoing weakness in China and the ongoing weakness in the Eurozone, the other two major drivers of global growth besides the U.S. The big upshot here is you had a little bit of a wiggle higher because the service sector, especially in the U.S., turned up a little bit better in the latest numbers for May. But what you see is whatever front running there was to boost global manufacturing, both in China and in the U.S. in anticipation of these tariffs, that has completely unwound. So all of this front running is now gone. And it really is on U.S. consumers now to sustain whatever positive growth there is. If they continue to resist, if they remain defensive, and that's really what we've seen so far. Again, looking at these GDP numbers here, it really is unmistakable. In looking at the retail sales data, unmistakable. In looking at the most recent numbers, as we just discussed, out of ISM, where the service sector shrank unexpectedly in May. Of course, that's powered by domestic demand overwhelmingly. If that's what's going on here, well, then the prospect of a Fed that's not going to do anything for essentially the majority of this year, not until the tail end of the year do you actually get a semblance of maybe some cuts, well, then the mix is going to start to look a lot less supportive. But as we can clearly see in last week's performance, the markets aren't prepared to worry about it yet. You already have the uplift in yields. That much is there. But stocks and growth-oriented assets outside of them, again, looking at currencies, looking at crude oil here, they're not prepared to show that damage. And the question that we're going to have to wrestle with this week is, do we get enough of a lull in headlines for this data to actually tell the markets now is the time? Of course, we'll take these things step by step all week. Macro Money is here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour on Fridays, with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com and commenting on the platform formerly known as Twitter, as well as on Blue Sky at Ilya Spivak. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, and with me today is my co-host, Shelly Van Witzenberg. How are you, Shelly?
Whoa, you full named me.
I did full name you.
Hello, I am well, thank you. How are you?
I'm doing all right. We got a great show today. We're filling in for Ryan, but we got a lot going on in the market. We're going to be tailing some of Ryan's trades, which are now available in the platform, and we'll be going over some of the performance dashboards that we put together in the newsletter. So, yeah, how are you doing?
Cold.
Yeah.
Office winter has kicked in now that it's nice outside. So yeah, we have blankets at our desks. It's silly. I'm excited to be here. What is up, chat? See some friends in there. Do we have a question for the chat?
Yes, we do. What is your favorite rainy day activity?
Let's hear it, chat. What are we doing on the rainy days? I love my Kindle. So when it's raining outside, I feel like it's just an excuse to do nothing physically and just read all day.
What about singing in the rain?
No, there will be none of that.
You're not a big singing in the rain type of person?
No.
Okay.
You?
No.
Okay.
I can't sing to begin with, so.
Yeah, that's the thing. If I
rain
sing,
or shine,
maybe.
I can't.
Right.
Yeah.
What is your rainy day activity?
Trade crypto.
Of course. I mean, there's always that.
Sit in my office and trade crypto.
What are we doing on nice days then? If just trading crypto all day,
Trading
every
crypto.
day?
Definitely.
Okay. Let's see. In chat, Wet Juice
It
Box.
says sleeping.
Sleeping. That's a good one. Wet Juice Box on X says, if it's not pouring, I'll go for walks during the sprinkle. Love it.
Okay.
I like that.
Wet Juice Box, who is one of our followers, he's deep in the trenches too. Paying attention to meme coins specifically. So Juice Box, if you have any tips, send them our way, because we're always looking for
hot alpha,
new trades, alpha. Yeah. Juice Box is convinced that he has alpha from the trenches. So
let's hear it.
Yeah.
Let's see. JDD on YouTube is saying, finding all the leaks in my roof.
Yeah.
Pots and pans out there collecting the drips. So what are we doing today? We're going to get into...
Well, we're going to go over some of the performance dashboards that we put together in the Wednesday newsletter, went out this morning, just to give an update on where the market's at. And then we got an update on the platform. Specifically, we have follow feed enabled for crypto trades. So Ryan has been placing some trades recently based on some of the stuff we do as far as like ranges and signals that he gets. So he's got a couple of trades that he put on, and I think we're going to tail them, I believe. At least I am.
I already did.
Yeah. Shelly front ran me, so.
Wet Juice Box is saying buy OKLO and DLLM Fartcoin. LMM Fartcoin. So.
Okay, so
there's our trench alpha.
I did the Oklo trade and made a ton of. I did follow the Oklo trade.
I did not.
Yeah.
Although I time-stamped when we brought that up, like in our text messages, because I always have my notepad on my phone open, and I put in there, OKLO, look into it. And so time-stamped was like May 16th. And if you look at the chart, it's like, damn.
It's like a day before it ran up. Yeah.
Like, man, that would have been a good one. So yeah, go ahead, pull it up.
Aklo?
Yeah.
Yeah, can we get our, yeah, there we go. So it's a 1 week chart. Let me clear this. Go to a day.
Mid-May. Oh, here we go. We were right before, not at the bottom, but pretty close to before that pump.
That's insane. 514. Okay. Yeah, right here. Look at this gap up. Yeah, the other thing I did with that is I think I started buying early May, and then I was selling covered calls against it at the top because it was so volatile that the premium on that was insane. So made a pretty decent return there. It was crypto-like price movement for sure.
Yeah. And for people who aren't familiar with this, what is Aklo?
It's a nuclear reactor development company. Has a contract with the U.S. Department of Energy. They don't have a product and they don't have revenue, but they're building these more efficient nuclear reactors. And apparently the delivery date for them is not till 2027. So this is just pure speculation, which is trades like a crypto. So, that's why we're covering.
Yeah.
But more specifically in crypto, let's take a look at some of the performance dashboards, because I think we got to cover here what's going on in the market. So taking a look, Bitcoin off the recent highs of last week, we're back down to like the 105 range, 105,000 price range, kind of just consolidating around there. ETH, I think, has a bullish look. It's up 17% the last 3 months, 46% in the last month. ETH's come roaring back. There's some catalysts there for ETH as a trade against BTC for sure. One being that the Ethereum Foundation has finally got its stuff together and has rooted out all the waste, and is now core focus has been on supporting ETH, not dumping it, doing a lot more in DeFi, rallying around its core values. So I think that's rather bullish, just because there wasn't a lot of direction the last couple of years from like the ETH Development Foundation. Another one is that following the back of these Bitcoin treasury trades, ETH, there's going to be a vehicle now on, publicly traded stock vehicle to acquire ETH and do the treasury, trade. So I think that's a bid for ETH. And I just think it's been kind of beaten down and still a lot going on over there. So definitely taking a look at ETH, see if this momentum continues. Solana, a little less so. I think kind of has consolidated in this 150 range. A lot of the meme coins hype has died down, not some like almost too saturated. So it's kind of like people don't really,
Needs a new narrative.
Needs a new narrative, essentially, yeah. And then XRP, Ripple, always an interesting trade, I think, because you got Ripple USD, which is a stable coin backed by Ripple, which I think is pretty interesting, that the collateral's backed by Ripple itself. And then, just ton of development by Ripple too. So let's see what else we got here.
Look at that green for Aave.
Aave, yeah. So this is specifically one that Ryan is trading. I think he put this trade on early this week, and 60% up move in a month. So definitely bullish there.
Comp is interesting.
Yeah. DeFi, it's like the DeFi narrative. Aave, Compound, stuff that makes money. Both of them are revenue generating protocols. So always good to go back to fundamentals. So yeah, I think there's a lot of ideas here. Here's the volatility table. Weekly
Quick question in chat
Sure.
from Wet Juice Box. Theory, trenches aren't oversaturated. There's simply a lack of participants currently. Okay. And then he's got a question. What is Ave's end goal? Do you know?
I don't know what Ave's end goal is, but I believe that Ave is a very profitable DeFi protocol and is basically a core primitive for borrow lending, capital efficiency, and just generally supporting the broader DeFi ecosystem. So, if people want to accumulate and just place a bet on protocols that have revenue, that's Aave. If people want to speculate and try and be early to things, then I agree with Juicebox. Like there's definitely some alpha to be had in being in the trenches and trying to trade these meme coin narratives. But I think for what I look at, I'm kind of leaning more toward betting on DeFi, revenue generating DeFi protocols. Aave, Compound. You can even look at Jupiter on Solana. I know Juicebox is a big Solana guy. I got another chat from JDD. So I look at tokenterminal.com.
The question is, how do you analyze fundamentals for crypto?
Yeah.
Where do you research that?
So I go to DeFi Llama. That's number one. That has basically your dashboard for all of DeFi and crypto. You can track revenue. You can track stable coins, which is an indicator of liquidity, liquidity. I've shown this before, but this green line is basically how much stable coins, which are US dollars on chain, right? That's liquidity. That's what's flowing in to the ecosystem. Usually a bullish signal for activity for, trading, DeFi. Token terminal is another one which gets into more revenue generating stuff. Really there's a ton of platforms. The other one is Messari. So Messari is a crypto research platform. Does a really good job of tracking protocols, tracking activity, news, narrative. But those are the top three. I personally think for like DeFi specific, DeFi Llama is the one. I think, you can track fees and revenues down here.
We've got a non-believer in chat.
It's all speculation.
Yeah.
So even traditional finance, it's all speculation.
Mm-hmm.
But despite popular belief, there are protocols that make revenue, that are profitable, that support billions of dollars of liquidity. You can track it. I dropped the links in the chat. If you want to stick your head in the sand and, there's other places, obviously, so it's fine.
So back to those dashboards.
Yeah. So I want to kind of talk about the expected move here and then get into our follow trade, because our follow feed for crypto is now live on the platform. We can take a look and see what Ryan's trades Ryan's placing. Bitcoin, I think it's consolidating in like the 105,000 to 100,000 range. ETH, probably, I think there's more upside on ETH. That's just me personally, not advice. Just, I think there's a lot of bullish momentum backing ETH. I think it's been beaten down for a while. And, I think it'll catch a bid here over the next couple months. So definitely pay attention to that. And Solana's probably, I think that narrative ran out a little bit. So we'll see what catches new there. I think Bitcoin Fi and like some of these synthetic Bitcoin products are flowing into Solana. So we'll see what happens with that. But back to our original thought, we have follow feed now on the platform. So
let's clarify. Follow feed is not new.
No.
Ryan being followable is a new addition. And so, yeah, you just simply go, if you have your Tasty Trade account, you go to the trading tab, you go to the follow feed on the left sidebar, click Ryan, and you can see his recent trades, which is the alpha. Because look at the Ave. If you were following and duplicating what Ryan is doing, he got in at 251, and right now it's 265.
Yeah.
Well done, Ryan.
Good trade, yeah.
Yeah.
So I think we said that he's going to be placing a couple trades a week. So I would be paying attention to that because he's the guy, he has the signals. I'm not the guy, he's the guy. So.
Well, and he did say it's an us thing. It's the Tasty Crypto, we're all placing these trades. Ryan's the big brain of the group.
Yeah, exactly.
So let's just give him, the majority of mind share on these moves. But yeah, awesome resource to have at your disposal. You can follow, and you can filter by crypto and see what all of the traders are trading. I don't know, Dan, if you can show that really quickly to filter by crypto. I think it's, if you go by strategy, I think it's in there. Yeah, crypto.
Okay, cool.
And then reset who you're following. Like just put it to everybody, and you can see that Tom is trading, and so cool to follow.
Yeah,
to look at.
We'll be giving you updates in our weekly newsletters too about what trades are being placed and what we're looking at. I think trying to get more actionable trades on and just stuff you can follow and easily tail. Mm-hmm. So yeah, I think number one, that Aave USD trade by Ryan, good trade. I think he's also talking about putting Compound on. So Compound was something that is on the platform. It's another DeFi borrow lend protocol, makes money, and has stable coins backing it as well. So definitely something to pay attention to. Mm-hmm. Yeah. Let's see.
And we just put out a couple of new how-to real quick snippet videos on the Tasty Crypto YouTube channel because we're trying to answer some questions that we get in our support tickets with videos.
Right.
And so there's a new playlist evolving over there. So if you're not subscribed to Tasty Crypto on YouTube, please go join us over there.
Yeah, and I think like in the chat, I see Theta Trader, great point. It is a space that's full of vaporware. It is a space that necessarily, hard to track fundamentals, or at first glance, it's hard to track fundamentals. But that's why it's such a great trading venue. It's all volatility. Mm-hmm. You mean to tell me you don't want to trade volatile assets? Like, what are you going to do? Like, you're talking about 20, 30% moves in a day. It's fun to trade, right? So, we are focusing on educational videos to help demystify some of this stuff. So we'll be posting more YouTube videos to the Tasty Crypto YouTube that are just more educational, more how do you take advantage of some of this stuff? How do you trade it? How do you fund your account with crypto? Some of that stuff. So hopefully they help. I think definitely something we'll be focusing on long term.
Absolutely. Theta Trader saying, I'll look at fundamentals after Fartcoin and Shiba die off.
You don't think there's a fundamental behind internet culture? I do.
There's an argument there.
Fartcoin, Shiba Inu, Doge, memes have value.
Mm-hmm. Absolutely. Culture is a powerful, human behavior.
Yeah.
Is a fundamental. He says that, yes, that was my point. Trade it because it's a risk asset you can trade, not because you think there's some fundamental case for most of these.
Yeah, of course. Mm-hmm. I mean, totally agree with you. Great point. But I am saying that if you have like a traditional, whatever, discounted cash flow or whatever fundamental analysis outlook, there are protocols, applications out there that do generate significant revenue for the space compared relative to the space, right? I'm not talking about NVIDIA or Apple trillion-dollar companies, but, if you track over the last couple of years, I think, there's a ton of projects that make revenue. But to your point, maybe not as fun to trade as a Fartcoin or a Shiba Inu, right? Definitely a risk-on asset. Definitely when, 0% interest rates, money printing, debt palooza, an asset you want to be in for sure. I think you can definitely argue that you're not trading it because of fundamentals, right? Maybe you buy and hold some of these projects thinking that down the line fee switch will turn on and, it's...
CK calls the crypto charts the purest expression of human sentiment because they aren't manipulated like most other equity markets. I see a 12-step program for crypto traders in the future, just like Gamblers Anonymous.
I like that. That's good.
Yeah.
That's a good, Emmett. I like that. Crypto Traders Anonymous.
Yeah. CTA.
No, but in all seriousness, I think there's some truth to what you guys are saying, right? Like, I think more than anything, the attention that's gathered in the space comes during these huge volatility spikes or around things that are very bizarre, like Fartcoin. Why does that have value? As value because other people think it has value and internet culture is strong.
Do you want to show them Cookie.fun just to illustrate Mindshare?
Yeah, we did this on our other show, Tasty Crypto Show, or
Beans.
Tasty Crypto YouTube, Beans. There's actually a way to, it doesn't look like I can, let's see, Cookie. There it is. So a lot of things in the space, going back to sentiment, can be tracked. So there's this tool, Cookie.fun. It tracks Twitter sentiment and general, vibes. So you can see over the last year or 24 hours, but I can go year to date, what projects have had positive sentiment, which have had bad sentiment. So obviously Bitcoin, it's the king, Ripple, Tron, Hype. These are projects that have been in, trending positively on X, YouTube, other platforms. And, something you can act off of, shows price, shows Mindshare, which, again, Mindshare is just attention, right? It's what people are talking about. So I think...
It's a good way to predict behavior.
Yes.
If popularity or, conversation is a predecessor to purchasing.
Right.
Yeah.
And I clicked into Aave. Aave is obviously a token we were talking about. We support. Ryan made a great trade on. It gives you a lot of information around major voices talking about it, and then sort of tracks sentiment and Mindshare as, over certain time periods. So I think it's very helpful because, to your point, chat, a lot of this is human sentiment. A lot of this is Mindshare, right? I'm a little jaded. Theta Trader says I'm a little jaded because I've had these arguments with people about the value of syrup pools and cake, for instance. The sentiment goes, and so does your investment. Skill issue? I don't know.
You got to know when to get out.
Yeah.
Just like anything. We are out of time, but before we go, I did want to shameless plug our Beans episode this Friday. We have Dr. Drip. If you can pull the link to the tweet just to show the graphic so people can see that this Friday, 9 a.m. Central, 7 a.m. Pacific, Dr. Drip is going to be on the show with us. He's an incredible trader, builder, early adopter of all things crypto and Web3.
Yeah.
It's going to be a really cool
somebody
episode.
Who's deep in, knows trading, knows what's hot, knows...
Maybe in, like, the deepest trenches. Like,
yes.
Yeah. So it'll be an interesting conversation. So thank you, chat, for being here. Thank you to everybody that's watching on X.
Yeah, and real quick, Chad, if you ever want to talk to us, I love the banter. I totally agree with you. We want to help you at the end of the day. I know that there's a lot of questions around this. Email us, email me, Shelly, support@tastycrypto.com. We'll answer your questions. I'll get on a call with you and chat with you about anything. Mm-hmm. So we want to help you and love hearing, the
good,
banter.
The bad, the ugly, all of it.
So appreciate it. I'm Dan.
I'm Shelly.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover a call diagonal. All right, so we've got a little bit of a pullback in the market, but one stock in particular has just been whacked in the overnight session here, and that is McDonald's. There was some E. coli news that came out. The stock is down, let's call it 7% right now. It was down all the way down to like 280 something at some point in the overnight session. So it definitely has had a big pullback here. It's a relatively low implied volatility underlying most of the time. But currently, because of this move, you can see IV rank getting into the 100 handle. Over 100 means that it's exceeding its 52-week high today, right now. So it's as high as volatility has been. I think this is an interesting time to get a little bit of long delta, be a little contrarian here into this move. Again, 20-point move. We've erased, a month and a half, 2 months of price action here, even though the stock has had a very significant rally of late. I'm going to look at a call diagonal spread. Even though, again, because volatility IV rank is high, it doesn't necessarily mean that actual implied volatility is high. The actual implied volatility in McDonald's is actually relatively low when you look at this, 20%, 24%. So it makes getting delta cheap. If something has high implied volatility, it's expensive to buy delta or to get delta via long premium. When volatility is low, it's relatively cheaper just because of the difference in the volatility here. So we're going to look at December. Let's buy this 300 strike. It's the first strike out of the money, but we've got $5 wide strikes here. I'm going closer at the money because I know that this is going to be a relatively cheap call diagonal spread for me relative to the width. It's going to be used $500 or $700 in premium here. Now the high we got to, and we could see this here, 52-week high of 317. Let's play for somewhere a little bit under the 52-week high here. We'll go to the 310 strike for our short option. Now, I'm picking up 18 long deltas here in a stock that's trading at, let's just round it and make it $300. So we're getting, $3,000, $4,000 worth of exposure in delta for just $500 or $600. So this is a reflection of two things. First of all, the leverage that you get with options, as well as the low implied volatility here. Again, I said it was cheap to get delta here. It's cheap to get exposure to stock or in effect delta via this call diagonal spread. So stock is rallying here. So this spread has moved pretty significantly. Just to show this on a risk profile at expiration is kind of a hard look because these are calendarized. I like to go to this Theo. This is kind of what our risk profile looks like. So basically a 50-50 shot. Using the analysis mode here, we can actually kind of simulate the passage of time. You'll see the risk profile move in that way. You can even take out some implied volatility. You could take out some from the long option as well. So you can see it's got a very interesting asymmetric sort of upside to this position. And as we keep waiting, we are missing out on some value here. So we'll see if we can get filled at 590. 593 here, 595. You can see the stock is rallying a little bit. It's at 296 now. So we'll try at 595. See if we can get filled somewhere around that. Probably going to have to move it up here. We gave up some money there in my analysis. Stock's rallied about $1.50 since we started looking at it here. We'll move it up to 310. That's probably where we'll get filled here. Routed it at 310, got it price improved at 604. A little bit of long delta in McDonald's into this dip, basically at the high of the session. This might be a good timing on that trade. So we'll see if this one works out over the next couple weeks. Do have a position that we have to manage today. One of our winning trades, we had a McDonald's position. It was trading at $2.97. The stock has rallied about $3 or $4 from here. We had a slightly bullish lean with a call diagonal spread, but really a lot of the value has come from this short option that we sold in the November monthly expiration at the 310 strike. We can go and look at that here. Just to give you an idea, it's trading at about 35 cents-ish right here. When we put this trade on, it was trading at about $4, and that's come from time decay, changes in implied volatility. Volatility has come in significantly after that big drop. So we've gained about $3, almost $4 in value out of that option. That option we sold at $3.90 is now trading at 30 cents. So with that position, the long option has only come in about $2, even though the stock has gone basically nowhere. So we bought it at 10, and it's now trading at $7.59. So we've lost $2.50 from the long option. We've gained almost $3.50 on that short option. So most of the value came from the short option. So that value is what is giving us this profit potential this morning or this afternoon here. All right, so we're going to close out of this position here. Selling out of the December call, buying back the November position here. We're going to try and get, let's see if we mark it above the mid price. 730, we got filled about 2 cents above the mid price, closing that one out for $126 profit. Nice little trade there, about let's call it 20% return on capital, 30% there. So nice little trade over about a 3-week time frame.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch.
I'm Tony Batista. He's Tom Sosnoff.
41. You got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realize it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
So Venmo is an app that is free, and you can send money to people who also have a Venmo account. So you downloaded Venmo.
Because I need Venmo.
For what?
So like when you go, can I have $5 or $10?
I never ask for $5.
When you ask for $20, sometimes I don't have the cash.
Okay.
I only have hundreds.
Oh. So one thing you noticed with Venmo, when you downloaded the app, was that you could see what other people were sending other people.
Why does
$10.
anybody want to see what anybody else is doing?
It's just like creeping, like Facebook creeping or something.
I know, but
I don't know.
people like this?
You do, clearly. So right now you owe me $10. And I know you won't remember, but we made a bet about solitaire where I said, you don't know how to play solitaire. And then you showed
and I said,
me.
I know how to play.
You said you did.
Yeah,
and
I
then
still do.
Then you showed me that you really do not know how. So you owe me $10.
Right, so how would I, if I
How
wanted
would
to
you
send
send me
$10?
money? Well, you gotta add money to it. Is a thing you gotta do. You gotta link it to your debit card.
Lindsay Grotto.
Yay! And you wanna pay me, you can put in the amount you wanna pay me. Or you can request money too.
I'm gonna request money from you.
Okay.
Because I am a nice person.
$2?
I'm testing.
That's a little insulty. Then you can click pay.
Pay.
There you go. You paid Lindsay Grata because I am a nice person. Tom paid you because I am a nice person. $2.
I like it. I'm in.
What do you think you'll use it for? Do you think
I don't
you'll
know.
use it?
Probably for you.
For me. Woohoo!
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Brilliant color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Oh, yeah, it is Monday, June 9th, a little bit after 5 p.m. Central Time. The best time. You know what that means. It's time for Tasty Live's evening show. Your little podcast. Your a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. Our clown world, I should say. More on that in just a bit. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. But if you want to be part of Bing, this little guy, this little nice, that is slick. This is a slick little look. If you want to be part of this chat box on your screen, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to YouTube, find the channel, find Tasty Live's channel, subscribe, and all of your thoughts, both appropriate and otherwise, will be streamed right here on the screen. Do us a favor. Keep it respectful. That's all I ask, really. Keep it respectful. Let's use our First Amendment rights while we still have them, everybody. Speaking of the people, let's say what's up to the people. Shout out to Donna. Shout out to Soul Train, Catan, Cato, I see you. Emmett, how are you? Who do we have? Dark Assaulter. What's up, Lone? How are you? Dav. Money Wandering. Love the name. And so many more. Shout out to all of you. I would sit here and just call you out by name individually, but I'm contractually obligated to say something of substance. I'm digging this new look of the stream. Shout out to all the production team behind the scenes, because that's pretty slick. What do you say we get into the meat and potatoes of today? Prayers for the Jones crew. What are you guys talking about? I saw somebody say something. My daughter wasn't in the hospital last week. I don't know what you guys are talking about. We're all good. We're all good here. I appreciate it, but we are all good. A little under the weather, but fine. We're all good. SPX, cash, my babies, closed up 9 basis points. The NASDAQ, up 17 basis points. Oh, you went full platform. You just lost me altogether. Dow Jones, that's probably a good look. I'm better heard than seen. The Dow Jones was flat on the day, and the Russell up about 57 basis points. It was, again, the outperformer. Again, you're getting this little broadening rally happening, which I really love, because what's happening is all the passive people in the market, all the passive are not performing at all. The market's basically not going anywhere at all on a daily basis. You're up like 10, 20 basis points in a day. So if you're passive, or if you've been investing in sort of the same thing that everyone else has, nothing seems to be moving for you. But under the surface, a lot of these small cap stocks are absolutely ripping. And a lot of these individual themes are absolutely ripping. Excuse me. Nuclear being one that just will not let up. Nuclear is just going absolutely insane. The uranium plays are going absolutely insane to the upside. And they should, right? Meta just signed another deal with Constellation Energy. So if I'm not mistaken, Constellation Energy, which is a utility company, has done 2 deals. I believe they did one sometime last year with Microsoft and now did something with Constellation Energy. So the energy trade, as we've been talking about, man, nobody liked this stuff, and we're going to drill, baby, drill, and the price of oil is going to go down in the dirt. Now all of a sudden, there's a little life in these energy trades, whether it's specifically energy or whether it's utility stocks or whether it's the offshoot uraniums as a byproduct, a second order derivative of the AI play. A lot of this stuff is heated up. I think it's tough probably to put an incremental dollar here at this point. I mean, Cameco was up 10% today. Okay, so the overall market not doing much, but if you're in a few of these themes, they're going insane to the upside. Again, Cameco up 10%. Tesla at second day of recovery. Don't say I didn't tell you so. Rewind the tapes, my babies. Go back and check the tapes for last Thursday. Was it last Thursday? I think it was. And I said, I thought that, you know, what you got to 285, this is probably an interesting level to start buying. Or to start nibbling, not start buying, but just start nibbling a little bit. And you're making the bet that you work towards some resolution between the two, some truce between the two, some backdoor deal. And it seems like, I don't think they've made a public truce at all. And I think actually Donald Trump said he has no desire to talk to Elon, but Elon's like deleting all his tweets after going nuclear. And to me, that seems like a bit of a sign they're moving towards neutral. And for that, the street is rewarding Tesla a little bit. I think 2 days of rallies here in a row. We're now at 308.58. And quite frankly, I don't know. You think they're done? You know, I like when I see people come out and start downgrading, because analysts have I don't know, maybe I've been around long enough. I don't think these people do a very good job. I don't think they're very good at their job. And I think what they do is something called cover your ass, cover your own ass. And so the stock was just at 380. I think it was Baird. I can't remember the analyst, but somebody downgraded them with a price target of like 320. It's one of my pet peeves to downgrade a stock with a price target that's higher than its existing price. It is one of my pet peeves. But you can almost bet you can do the exact opposite of what these guys say. When they're upgrading the stocks, the move is over. You follow their example, you're going to be made into exit liquidity. You follow their downgrades, the move is already over. You follow their lead.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you? We took him as a charity case.
All right, Tony, we have a big week of earnings coming ahead and in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important
Hey,
when
Victor,
you
can you
have
hear me?
volatility in the overall market,
Yeah.
because sometimes
What happened?
Easier to find a higher probability trade.
Just your video and audio froze, and
time frame than you would for earnings. But if you
couldn't
are
see
gonna
or
trade
hear
earnings,
anything
I
from
think
you.
have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realize it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go where
All right, take two. Let's try this again, everybody. Sorry, not sure what that was, but I guess you start talking about Tesla, and the administration will cut you off the airways. Thank you to the FCC. Just kidding. But like I said, my more broad point is that the loser, I think, over the last couple of weeks is likely the passive investor. While you are getting positive performance, you're seeing these massive moves in these underlying companies, especially sort of small and mid-cap companies. And so it's not surprising. It's the second day in a row. I think you're seeing outperformance in the Russell relative to the NASDAQ. And I think that I said this last Thursday, but I mean, you don't have to be a rocket scientist. Look at this chart of Microsoft. This is one of the biggest companies on the planet. Would you put an incremental dollar in that chart? Do you think you're getting value? Probably not. If I go to Meta, same thing. You're nearing all-time highs. Do you think you're getting value in this chart? The answer, probably not. If you go to NVIDIA, my point is, out of these 7 of the largest companies, you're not getting a particular. I'm not saying they can't go higher, and I'm not saying the multiples can't expand on these. I'm just saying that market participants are generally going to look to where they can get the most bang for the buck in short-term performance, and it's probably not in 3 or 4. If I can go to Netflix, I get pretty much the same thing. 3 out of the 4 of these Mag 7s. So, you know, at some point, if a bull market's going to continue, you get a rotation. And it took a long time to get to this point, but at least in the very short term, it looks like the market's trying to find rotation, is trying to find new value versus the same old stocks. And I think at some level, that's a short-term positive signal versus the market dumping. And I'm going to say this one time. I think I've said it many times in this stream over the last couple of weeks in particular. I think the recession game, the recession talk, it is a loser. It is a losing proposition. I think it is entirely possible you could call an upcoming recession, and you are not going to see what has happened in a typical recessionary cycle. I think what's happening right now, there is clearly a desire to sort of change the monetary structure in global trade and monetary policy, fiscal policy. And I think trying to step in front of that train with your I'm going to buy bonds and this is a recession, I'm going to sell stocks, playbook. One, I don't even think that's where we are. And two, I think that's a losing proposition. There's not many times I'm going to be talking about a quote unquote recession here. I think half the damn country's living in recessionary conditions and have been since last October. When or does it catch up with the aggregate data? I'm not sure. I'm not sure it matters. I think when you're turning the dollar, I think when you're turning the dollar into toilet paper in front of everyone's eyes, people have to take that into consideration. How to think about nominal price of assets, even in the face of a slowing consumer, if that's in fact what you're seeing at the aggregate level. I think you got to be real careful, and I think it's a losing proposition. I think it's especially a losing proposition to be talking about it every single day and waiting for it. People have been waiting for a recession to show up in the aggregate data since 2001, man. And at some point, you got to go, you know what? I was wrong about this cycle. I'm going to reset. Because if you've been calling for a recession for 5 years, were you right if it eventually comes, or were you wrong like for 2 cycles? I don't think there's a ton of people out there doing that. I'm being hyperbolic to make the point. I don't think it's a very valuable discussion, and if anything, I think it holds people back from risk participation. It keeps them in this paralyzed state, waiting for this event that may or may not come. Because even if it comes, what is the response? What's the normal response to recessionary conditions, especially at 7% deficit to GDP? What's the normal response, man? How do politicians hold power? By allowing you to go into a recession and not juicing up fiscal spend? Do you think that's how they hold on to power? Or do you think they make promises and they write checks that they themselves do not have to, that's not coming from their bank account, it's coming from yours. It's coming from mine. It's the easiest way to hold power is to give you something that I pay with your own money and make you feel like I did something for you. If that happens, deficits widen, dollar weakens, nominal prices go up, not down, unless there's a liquidity problem. Liquidity problem can totally happen, and you got a whiff of that at that horrible 20-year auction from the other week. It's not out of the cards. But if it's a liquidity problem, that's one thing. If it's a recession, that is another. If they come together, then that's a whole different issue. But I don't think that's what I'm hearing in these discussions. It's not there's going to be a liquidity event. It's there's going to be a recession, and for some reason, that's a reason not to own assets. And I think people have a real hard time making that case, especially over the long arc of history. Let's talk vol, which ironically is dropping. We're down to 17 VIX cash. Sorry, I know it's annoying. Listen to me cough. /VX at 1828. And the VIX term structure is relatively normal. A bit of a kink back in December, but relatively normal in contango, that is. And I bet most of you, I don't know. I don't think this is true for everybody. I was going to say some of you probably missed that April volatility. Some of you probably missed that April volatility, that backwardation, that 30, 40, 50 handle, even the 60 VIX print. Things just get crazy, and everybody tells the truth. When everybody stops pretending that they're some all-knowing, all-seeing tarot card reader, and they just tell you what everybody knew to be true at the very beginning, nobody knows. And we're playing a card game, the biggest card game in the world. And, some part of me, I love those markets. I know not everybody does, and I know it probably did a little bit of damage. Those outlier moves can do some damage, especially to people who are selling outlier moves. And I don't like to see retail get hurt in any way, shape, form, or fashion. But I have to admit, I am partial to high volatility regimes when it's no longer about the narratives anymore. You have to play cards, and that's, I mean, that to me, that's the funnest. That's what this game is actually all about. You know, and you get to look in everybody's eyes and go, "Oh, you're scared. This game isn't for you. You're scared, aren't you?" And you get to look around and you get to see what's what, who's got ice in their veins, and who needs to sit this one out. Otherwise, they're going to lose all their money to the market. Those are my favorite periods of time, if I may be honest. ZB 112, 16, 30 seconds, 112 and a half. Not going anywhere for a while. Straight up chop zone for bonds. I said this to you, I think, last week. When we were at 114, I thought it was probably a good opportunity to take off half of the long bond trade. Because even though I want 117, a move from 109 to 114 is probably a pretty decent move in the short term. And if I'm not being greedy, I take some off the top. I take some off. It would be great if it gets back to 117. You know, I don't know. I don't know if it happens here. I will say that the setup and the narrative for U.S. Treasuries, especially for duration right now, is very negative. But in some ways, I think that the Overton window about the U.S. debts problem, I just think it moved to where it should have been. You know, we've been talking on this program for a year and a half, and other people have been talking about this setup for a long, long period of time. You know, but past COVID, you can't print $10 trillion in the economy and go on a ZERP spending spree for 15 years, and then rates moved 5%. Everything's going to be fine. You know what I think is hilarious too? There was this saying, right, that interest expenses are now higher than defense spending, and that's problematic. So you know what the government did? You know what your administration did? They go, okay, we can fix that. We'll increase defense spending to $1 trillion. And that way, your interest expense is only equal to your defense spending. It's not more than. Did we fix it? I don't think that's what we meant. That wasn't exactly what the solution was. It's kind of funny when you think about it. Some part of me, if I could stop really quickly and speak to not only the state of U.S. debt markets and, you know, the flattening yield curve. We're now 48 basis points between the 2s and the 10s, everybody out there. They are lifting that short end. So while the long end lifted, what's happening in the short run is they're going, Powell's crazy. He's not going to do anything. And they've priced out a lot of these cuts in the short run. They didn't shift them, right? They didn't shift them from this year to next year. They just got rid of them. So we basically have 2 cuts priced for this year. And I don't know, this was 95% that they were going to have a cut in September. It's now 70. So it's, you know, the closer we get to September and the less the Federal Reserve is sort of firming up that it's going to happen, who knows? But the point is, two in this year in 2025 and 2 in 2026. There was no shuffling. They just removed them all together. And that's how you get a short end that is lifting up towards 4%. We were somewhere around 380 at one point. And now the short end is at a little bit above 4%, 4.01%. And which puts the difference between the 2 and the 10s have completely, I don't want to say collapsed. I don't know if that's hyperbolic. But we've gone from 60-something basis points, I think 65, 66 basis points, 67 on Monday, April 21st. We're at 67 basis points. And we've now flattened down to 48 basis points with the lifting of that short end. Some part of me, and I tweeted about this a little bit. Catan says $8 trillion looming. That's right. We got to roll this stuff over. Higher for longer, says Lone Sophos. Keep it real. When you heard the higher for longer, did any part of you, were you thinking like 5 years, maybe more? I don't think anyone was really thinking that. But if you look at that implied curve, that's only 4 cuts. That's still fairly high interest rate, and I don't even think they'll cut 4 times between now and the end of 2026. At least I think the market needs to remove some of those cuts before it becomes actual, given reflexivity in markets and market pricing. Some part of me is looking at June 14th. I tweeted about this. And the organized protests across the country. Some part of me that's been thinking all day long that I don't think that's going to go well. I don't think it's going to go well. I think it's set up not to go well. And some part of me is like, where I want to buy some vol. You know what I mean? Not meaning I want to buy VIX or anything like this, but like to me, June, if there was like some VIX as a measure of volatility on the social volatility of our society in the U.S., I would buy that right now. I would buy it until my hands bleed, because I do not think these organized protests throughout the country on June 14th, I don't think they're going to go well. And I can't figure out what to do with that feeling. It's kind of a weird, sick thing that that's the way my mind works, which is where's the trade and all this? But I mean, what else can I do, right? Things are getting crazy when you look outside, and I can just do my thing, which is add and remove liquidity to the marketplace. But I can't help feeling that this is not set up to go well. And where can I buy vol? If it is even market moving, which I'm not entirely sure it will be. Some part of me wonders if the market's sort of already seen this coming, and that's why Palantir is a $132 stock. I think it's, if I may opine, and if we may have a little bit of aluminum foil hat time. Uptick says, what do you mean by not go well? Poor turnout or violence? I'm hoping not violence, but it's more the latter than the former. Uptick. I think property damage, things of that nature. I think it's, I'm a little bit, I see the world maybe through a different lens. And when I see some organization because this takes a lot of money to coordinate all of this stuff, to plan this stuff. And I think to myself, who put the money down? And what's the objective? If you're going to do these nationwide protests, there must be an objective, right? If it's 100% peaceful, and everyone just says, okay, we demonstrated, we showed our part, we expressed ourselves, let's all go home. Was that the point? Expression? Usually there's sort of a means to a political end here. And I don't think this is going to create any political pressure unless it doesn't go well. Unless there are really, really bad optics. In which case you get situations where, you get martial law, or, you get a government that says, hey, we need to expand our partnership with Palantir to maintain some state of law and order. It's pretense in my mind. The aluminum foil hat stuff, it's like, this is pretense. If this doesn't go well, what's the next escalation point? to me, I think, like, you know, I don't really buy the whole we're paying Palantir $30 million. You know, we're paying them $30 million to help to identify illegal immigrants. I don't buy it. You know what I mean? But I never bought it. I think I have an idea of what Palantir does and why it's valuable to a government to maintain a sense of control and to be able to identify threats to an established power structure. I think that's why it's valuable. And so I always said this is a hedge. Palantir is an emotional hedge, because if I make money on Palantir, it means I'm most likely not going to like the world as it looks as I look outside the window. That's what I always said. And so the more entrenched I think Palantir becomes into our government, the more opportunities for the government to use sort of this power that they're unlikely to be responsible with over the long arc of time. And I think Alex Karp and what's his name, Lionsdale, you know, they're doing their best after this New York Times article was written, I believe, last week. They're doing their best to fight the PR war. And they talk a good game, man. But I don't think anyone's buying it. You know what I mean? I think we all know what this company helps governments to do. And I don't think we're super excited about that world. And it's always the same thing, right? The reason you must do this is because the good guys need the biggest gun. Otherwise, the bad guys will get that gun. So we walk ourselves into sort of totalitarianism or techno-feudalism or sort of technocrat authoritarianism in a surveillance state. And we do so because we convince ourselves if we don't do it to ourselves, a bad guy is going to come do it to us, quote unquote. But it's like if you end up in the same place, what does it matter anyway? Anyways, I don't know how I got to this. My point is I'm a bit nervous about June 14th and the optics it's going to create and the potential political and social volatility that stem from it. I don't know if it's highly tradable. I don't know if it's highly tradable, but I think at some level, you know, I think you continue to watch Palantir and you continue to watch them likely expand the relationship that they have with both domestic and foreign governments. I think they're very, very expensive right now. That's obvious. But what I would also say is most growth companies have these periods of time where the market sees a future world of income and they start pricing that today. And that's why the multiple goes crazy, because they're not pricing it on the revenue that you see. They're pricing it on a ton of revenue in the future that the market sees that everyone else doesn't. And so the growth multiple goes crazy, or the multiple goes crazy for these high growth companies for a while. So just because it is expensive, as a trader, I think you got to be careful. As an investor, some part of me thinks this is like you just dollar cost average this thing as far out as the eye can see. And then you hope you lose money, because that world's going to be crazy. You're walking your ass down to pre-crime or social credit score state. Anyways, I wonder if people agree with me on this point. I wonder how much people sort of give Palantir the benefit of the doubt. I don't know. My mom lives in Beverly Hills. Beverly Hills is quiet. I'm sure it is. So you're predicting another day of love like January 6th. It's not that I'm predicting that. I don't want that to happen at all. I'm just saying the setup is there, you know? So if my whole thing is trying to analyze the incentives, and I think all of the incentives, all the incentives are there. I think if I'm not mistaken, it's Trump's birthday, it's Flag Day, and you've got these massive protests scheduled throughout the United States. I think on one side, you've got this pressure to show strength. And on the other side, I think you got organized money that's being put to use to create structured political volatility. And then you've got a lot of organic pissed off people that want to express themselves. And I think it just takes one person in a crowd to do something silly. You know what I mean? People don't, you know, let's say there's a pile of bricks somewhere in a demonstration. Nobody asks themselves, why is there a pile of bricks here? Nobody asks themselves that. But then, you know, it just takes one person to pick one of those things up and throw it. Now you got a big problem on your hands. I hope nothing happens. I don't know that it's tradable in any way. And I am praying that it is a peaceful demonstration and a show of frustration and we move on. But I would argue it's not the way I would bet. And there's nothing you can bet. I looked on Polymarket too. There's just nothing. I'm a sick individual when I'm just looking for stuff to bet on like that. 110,000 Bitcoin. You have a lot of I think a lot of tailwinds to digital assets right now, whether it's the administration's seeming strategy when it comes to managing the dollar. Clearly, this is what I think they're doing is they're trying to monetize their balance sheet, their assets. They're trying to monetize it in a way we've never seen before. That's why you have the Bitcoin reserve. That's why you have a sovereign wealth fund where you have federal land and you have the potential of them revaluing gold higher. You know, for the very first time, I think at some level we're going to start talking less about the debt and talking more about the government monetizing their assets. I think that's 100% part of the strategy. I think there's a bunch of people that don't think they have a strategy, that they're just pushing buttons. I think those people are missing out on sort of what's, again, I've said this a million times. You don't have to like what's happening, but it's so clear to me that there is a strategy behind all these actions. Anyways, I think there are a lot of tailwinds here, whether it's what I believe the administration strategy is and their approach to the dollar, whether it's a lot of the new proposed legislation that will give, I think, players in the digital asset space a bit more predictability with regards to legislation, whether it is just demand. I mean, look at Circle, for God's sakes. I said last week, this is going to be an old school IPO. This has the potential to be an old school IPO. We've seen for years, maybe a decade, we've seen basically IPOs are really just ways for companies that have been held private too long and a bunch of private investors that have made the lion's share of the return. They're able to finally go IPO when a lot of the growth prospects of a company has been realized, and it's a mechanism to dump onto the public. And so you haven't really seen these like wildly successful IPOs like you might have seen, let's say, in the early 2000s or the late 90s through the internet boom. And I think this was one of those situations where just demand alone, 24 million shares, 24 million when it was like 20 or 30% oversubscribed. So they end up going 34 million shares, just raising $1 billion. That seems like way too little for the only pure play. It's the only publicly traded pure play on this in this theme. Anyways, Another 7% here, definitely off the highs. At 138, we closed much lower than that at 115, but another 7% to the upside. Damon says, Victor Jones, did you ask Mike Butler? I bet he would know where you can bet on chaos like that. I actually should ask him. I did this thing every day I was in the office. I would go up to Mike and Nick, and I would say, where's the money at? That's all I would say is, where's the money at today? And either they would have like a market play, or they had a bet that they thought was a lock. And I never asked which one, give me a bet or I just asked, where's the money today? And whatever they had the highest confidence level in is the one that they would tell me. Those guys are sick. Those guys are in a good way, man. They are the embodiment of what this game is. Thinking through just pure risk and reward. No narrative, just pure risk and reward, and they'll look anywhere for the opportunity. If it's futures, Forex, equities, big digital assets, poly market, DraftKings, they can just tell you where the odds favor throwing a few chips down on the table. And I can't tell you how much I appreciate that. Silver continues its move to the upside. This is another one, man. Thank God this worked out, bro. This would have been my entire professional career flushed down the toilet. But yeah, man, we hit 37 in silver today. I got a really big smile on my face. We hit 37 in silver. A little sigh of relief here for me, but we got the breakout in silver, and it keeps going. I think what people just do not understand about silver, if you've never seen that, when silver goes, it goes, man. The beta on this is nasty. Its autocorrelation is nasty. It goes to an extent that you can't even really fully fathom, and that's one of the reasons why I didn't close out silver. I took off 50% of the deltas, and I go, I'm going to let this ride, because I've seen this happen before, and you know how they get it to slow down? They raise the margin requirements. So when you see one of these exchanges raise the margin requirements, that's when I go, okay, the party's over. And I'm kind of curious if that's the way the party ends this time. If it just naturally, okay, we find some new range here, and then things just gently trade sideways for a bit. That's generally speaking, that's not how silver trades. You get these explosions and these just auto correlations in one direction in a way that you sort of can't see coming. So then what can you do? I think we can just watch the gold silver ratio, man. And it's starting to move back in line, back towards something that's a little bit more normal. What are we at, like 90, something like that right now? Yeah, 90.2. It's still elevated. It's not as extended when we were like plus 100, something like 103. Let me try to put this chart in front of you guys. It's kind of hard to read because the font is so small. But, this particular site says you switch to buying silver when the gold silver ratio is above 80. You switch to gold when it's below 50. The thing is, you wouldn't have had many opportunities to buy gold if you were only buying it when it was below 50, and this ratio is below 50. But, its longer term average since the 70s is somewhere like 61, but we have not been near 61 in a few years. We didn't get there back in 2021. We got close, back to 66. The last time we were down that far was like 2014. But I think on a long enough time horizon, it's still a bit, 90.2 is still high. It's the low end of its range for the very short term, but it's still elevated. I think probably if it doesn't end up being the exchange requirements that gets moved on silver, then it's just we get back to something more normal. Below 90, we're getting pretty close to a level that's approaching something that makes a little bit more sense. But what a move. And it's not just silver itself. I think my silver miners are going nuts too. So PAS, Pan American Silver, this thing had a sick move from 22. It had its breakout up to 30. I think the other one that finally is getting a little bit of a move here is Freeport. I think this one's still trading at a discount relative to where copper's trading. I think this one, to me, Freeport looks a little bit like the way Newmont Mining looked a few months ago. We're talking about Newmont Mining at $40, saying this doesn't make sense. This doesn't make sense. Gold is still near all-time highs, and this stock has cut in half. It doesn't make sense. It wasn't cut in half, but like 30, 40% off. And we've subsequently seen this recovery, and not just this miner, but many others. And in my opinion, and I might be wrong, but this is the next one. I think you guys all know all I want to do is stay in the materials. I want to stay in energy. I want to stay in utilities that provide energy. I want to stay in water. I want to stay in the base metals. I want to stay in precious metals. I want to stay in stuff that you can't print for the duration of this, who knows, 5-10 years of financial repression. I want real assets. And the tech beta that I want on the other side, it's Bitcoin, which is still has scarcity. So that's kind of what I'm doing, man. And so copper, in my opinion, it's another one of those materials. In my personal opinion, Freeport McMoran is too cheap relative to the price of copper. Excuse me. And when the market goes and it finally finds value, I think they'll come for Freeport eventually. It's just a waiting game, maybe. Maybe I'm wrong. Let's see what else is out there. I wanted to talk about some themes here. I haven't interacted with the chat much. Faded silver today. I hope you're wrong. Victor Jones says D-chat. Faded silver today. I don't hate that move. I don't hate it. Like, I wouldn't buy into silver at 37. But the problem for you, D-chat, is many people do trade that way. I don't get it. I don't understand the whole buy the breakout thing. But some people do it. And I think one of the reasons you're getting this sort of follow through is those technical, especially in commodity markets, those technical buy the breakout momentum trades. So I wouldn't be putting a new incremental dollar into this trade. I think we got a good price when we did it, between 32 and 33. But I don't know. I wish you the best. Here's the thing, D-chat. I think even if it does roll over, I think we've probably established a new range. And if I'm right that we've established some new range and 34 becomes support versus resistance, I'm cool. I'm still going to be making money. So you can make money on a fade and I can be making money holding long. It can work for both of us. Lucid says, then it's best we eat at the silver table. However, this looks like it needs a breather. Yeah, maybe. Catan still long the junior miners. Good on you. Same. This thing is so under-owned. Vic, if you want real assets, Austin, Texas real estate's in the doghouse, 20 to 30% off. I know. It's not just Austin. It's DC. It's a handful of cities right now. But it's hard because I would say most of the housing market has a supply-demand imbalance. Most places, not all, but many places throughout the United States have a supply-demand imbalance. There's way more supply than demand. And people are just stubborn. They're so stubborn, they're not moving the price. In some places, you're forced to. In some places, there's just too much supply, and they're forced to move their price a bit. But I don't know. I've been waiting to buy the home builders. And some part of me wonders, are we close? Are we close here? On a short time frame, XHB looks okay. I say this every week. On a long time frame, it's not much of a discount, right? 125 down to 96. And who are they selling to? You have to, at some point, we got to get these things at the inflection. The inflection point before a change in monetary policy, before an easing. That's ultimately what starts to shift the supply-demand imbalance. So as they start to lower rates, that creates, it could potentially, if they do it at the right time, if they start to lower rates, the long end will come down with it. And as the long end comes down, the borrowing costs go down, which gives people more purchasing power, which helps them to go meet the supply. Because supply is not changing its price. But where is that inflection point? Does 4 cuts over the next 2 years, is that a bit too hawkish? Because we don't need to buy this exactly when this thing is right before they're getting ready to cut. We need to sort of buy these assets at the turning point between hawkish and dovish readings from the market or anticipation of the market. And is 4 cuts over the next 2 years, is that too hawkish? Or could we cut that to 3? Or even 2? Is that possible? I don't know. And even if so, that means we're still probably pretty close. I'm trying to talk myself into buying the home builders. Catan says, Vic, your chat is devolved. Why? What happened? I see. If you want real assets, you go out into the street and obtain them. Catalytic converters or somebody else's wallet you found. Gangster life. You guys are nuts. Yeah. I don't know. What say you guys about the home builders here? I just don't know what we're going to build. There's no way we go back to building those same 2,000 square foot homes. Right? Like all of these home builders have to pivot, do they not? Into building smaller homes. I think I'm talking myself into buying these things just a little bit at a time. The problem is I don't know what the catalyst is to actually give these things value. Is it just lowered rates? And is that even enough? I don't know. I think it's just like energy stocks, though. For a year, I had to listen to everybody tell me how how all of the energy stocks were dogs, and they weren't wrong. But at some point, everyone changes their mind. People are starting to change their mind about energy here. Oh, gosh. The tiny homes market seems to be catching on. Gosh. McMansions by the lake. I don't know what's taking so long. You know, it's like they're living in shoebox apartments in Japan. You know what I mean? This is what happens when you monetize your debt. The scarcity of land becomes crazy expensive. That's what's happening here. And so you have to downsize the size of the homes. So, you know, you either got to start building a lot more densely, you know, a lot more multi-units. You got to deregulate first the building and the zoning. A lot of these places start building more densely populated housing markets, or you got to build smaller homes on smaller lots. You can't just keep doing the same. We can't just keep building the same average size home at twice the cost. Garage life. No one wants to sell. Lots of people locked in low rates, and no one giving them up for 6+ rates. I know, JDD. I know. But eventually, there's no new buyers, and there's just an accumulation of sellers for various reasons. Van life down by the river. I'll do a couple more here. Oh yeah, this is the other one I wanted to show. If you're looking out for a recession, and I'm not saying that this is going to be accurate, but this Atlanta GDP now, this thing has been, I've never seen GDP estimates with more vol in them than Atlanta GDP now over the last 2 quarters. It was, what were we, negative whatever percentage in the last reading. And now this thing has just shot up like a rocket ship. We're up at 3.8%, and we were just a week ago even higher than that. We were above 4%. This is insane. This is like it's a meme stock. I don't know if this is going to end up being real. I think that the same thing that caused that negative reading for the previous quarter was net exports. You could see the exact flip of that happening this quarter, and that's what nobody talked about. Everyone got spooked about the negative print. Nobody asked themselves why, and if that's true, everyone's pulling their imports forward. What does that mean for the next quarter? You get the exact opposite, would you not? I think that's ultimately what we're going to see. You see a big GDP print for the second quarter. It will take a recession for home builders to bottom out. I think that's probably true. You need a recession, and then you need a reason to drop rates in order to clear the supply. I think that's probably true. Yeah, I think that's probably true. Ethereum is just, you know, I barely, and when it comes to digital assets, I'm Bitcoin only, because I don't really understand the idea of trading a digital asset that's not scarce in and of itself, right? Because isn't that just the same? Don't you have the same problem just have, like, why trade something you can print an unlimited number of these things? I get that the Ethereum network has value, but yeah, I'm in my scarcity bag, so I don't play the ETH trade as much. That's a reset, Victor. Yeah. Doesn't it seem like, I'll end on this sort of like, I'll end on this. There was a period in time through like 21 and 22 where you could kind of see what was happening, you know? Like, in my personal opinion, like, money is sort of this upper limit on technological advance. Money is technology, but we increase the money supply by about 6% on average, and at some level, I think that that upper bound acts as some limiter on technology and on the rate of change of your life. And so when that changed to like 10 or 20%, the thing I told some of my family members is, like, you got to get ready for a completely different pace of change on everything, on the pace of technological innovation, on the pace of social and political change. Everything's going to change, and you're used to 6% change in money, 6% change in technology, 6%. And we've just changed that, and you're going to feel it immediately. It's going to feel very strange. And I also think, like, at some level there's, I don't want to say everything's coordinated, but I think there's a lot of this where we're doing this, we're going through this choreography. And I think that's why at times it feels very strange. That's why at times I think it feels unnatural. It feels like people are making decisions that clearly are not in their own best interest, not in society's best interest, not in their nation's best interest, but we're making them anyway. And people can't, for the life of them, they can't understand. Why aren't all of these mental models I have about how the world is supposed to work? I'm supposed to be able to vote, and those people make choices that are in our country's best interests, and we should be constantly trying to improve the lives of everyday common citizen. And, like, that's the mental model that everybody has. And then they look outside and they go, what's no, this makes sense. Nobody's making decisions in what seem like the best interest of the nation. And that feels unnatural. It feels crazy. And I guess, like, a few years ago, I had a very different thought about what was happening. Like, we've reached the end of the line. Like, this system as is cannot continue, and it's very obvious. So now we need to take steps towards getting to a new system. And, you know, for whatever reason, we can't just be honest about that. You know, we have to create pretense. We have to create volatility, create fear that allows us to roll out these new mechanisms. Which, to me, I think that's a misread by a certain controlling class. I think it's a complete misread. I think we all know it. We all see what's happening. We've all been through so much that we can take it. You know what I mean? It's almost agony waiting for it to roll out and having to watch all this pretense, all this choreography, just in order to do what we all know needs to happen, which is a reset of the social contract, a reset of our monetary system. It's just watching all this craziness. feels unnecessary. And what's perhaps a bit sad, I don't know why I do this at the end of the show. What am I doing? I'm going to blame it on the NyQuil. I think what's most sad is the people who think all of this stuff is organic, the people who get lost in believing that they are participating in some sort of political resistance and not understanding the broader context for what's happening. So I would say, man, if you're signed up for any one of these things over the next week, more power to you. Just keep your head out there and keep your cool. Have your friends keep their cool. Because, the incentive structure says they need optics. They need optics that show disorder and chaos in order to bring a new set of rules to establish law and order. That's the game. That's what keeps happening. And when you get scared, when you were scared in the mid-90s, you gave them the pretext to pass the 94 crime bill. When you got scared after 9/11, you gave them the pretext to pass the Patriot Act to make you take your shoes off at the airport, for them to be able to monitor your phones, your emails, your texts with your loved ones. And you gave them pretext to invade countries and spend trillions of dollars. So I just think in markets, the worst thing you can do is operate with fear. And if there's one thing that trading has taught me, it's that fear is a really useful weapon to separate you from either your money or your liberty. So I don't know, if you're out there over the next week or so, keep your cool. Don't give them your fear and don't give them your anger. Give them your logic, give them your reason and your rationale. All right. I'm drugged up, everybody. My apologies. I'll see you back here tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade.